Yeah. Hello, my dear students. Hope you guys are all doing good. I hope that your preparation is going on well and you guys are putting all your efforts for your taxation paper. So here in this video, I have picked up a few concepts. The main objective of the video, which I will try to explain it here, what you are going to get from this video and what should be the expectation from this video. First, let me set that first right. So in this particular video, so what I'm going to do is I have identified the most expected topics, not most expected topics. Definitely a question will be there from this. So even if you pick up any question paper in the past without a question from the concept whatever I have listed down here, there will not be a question paper. So like that, there are a few concepts, there are a few topics in each chapter from where there will be compulsorily a question gets tested. So a few such topics you have identified and I'm going to quickly revise them before you. So I'm going to spend somewhere around some 2 to 2.5 hours of time. So please get yourself prepared. So get ready. And this is going to be a little bit longer session, not so lengthy session. 2 to 2.5 hours of time we are going to spend now. So where I have identified a few concepts from which there will be a compulsory question from this topics, that and all we are going to quickly revise it. That's what going to be the objective. So I have listed down, I have an agenda today. So all these topics I have to cover, this I will do it. Okay, right. Fine. So having said that, first, without wasting any time further, I will directly jump into the discussion, starting with the first and foremost concept, which is related to manner of utilization of input tax credit. So the first concept which we are required to do is manner of utilization of input tax credit. As you all are aware, first question you are required to solve comprehensive question where they will be asking you to calculate the net amount of GST liability which has to be paid in cash. So net GST liability which you have to pay it in cash, that question definitely they are going to ask you. In order to answer that question, the first thing which we must be aware is what is the manner of utilization of input tax credit. So this one we need to understand. So let us try to have a look at it. So what is the manner of utilization of input tax credit? We will start with that. Right. So if you see this one, so manner of utilization of input tax credit, I have this listed down here. So what is the manner of utilization of input tax credit? As we all are aware, so just follow this format. So when you are answering the question, try to follow the format, something like this. Yes. So try to follow the format, something like this. Always try to keep this heading CGST, SGST, IGST, like that. You will try to keep the headings, columnar headings should be there. You should always start with IGST. First start utilizing the IGST. IGST must be utilized for making payment of IGST. And after that, if any excess is left out, we should first start utilizing IGST. So first take the IGST input tax credit, that must be first utilized for discharging the IGST payment. Thereafter, if any excess is left out, after utilizing that IGST for making payment of IGST, if any excess balance is left out, that must be used for either CGST or SGST. In whatever combination you want, you can use it. Either you can use it fully for CGST or you can use it fully for IGST, or in some proportion you want to allocate that IGST balance for CGST and SGST. In whatever manner you want to do it, you do it, but first try to exhaust that IGST balance. That is the first step. So IGST must be utilized first for making payment of IGST. Thereafter, if any excess balance is left out, that must be utilized for making payment of CGST or SGST in any ratio in whatever manner you want. So first exhaust the IGST balance. Once you have completely exhausted the IGST balance, then you come to the CGST balance. CGST must be utilized first for making payment of CGST. Thereafter, if any excess is left out, that must be utilized for making payment of IGST. Then SGST must be used for making payment of SGST. Thereafter, if any excess is left out, that must be utilized for making payment of IGST. And one thumb rule here, CGST can't be used for SGST, SGST can't be used for CGST. So these are the thumb rules which you have to remember when you are making the utilization of input tax credit. And always you remember one more point here. If at all you are required to discharge any liability under reverse charge mechanism, if you have any liability, if you have any liability to pay the GST under reverse charge mechanism, that liability must be paid in cash. For that, you can't utilize the input tax credit. That must be completely discharged in cash. So whatever GST liability that you are required to pay under reverse charge mechanism, for that you can't use input tax credit. Compulsorily discharge that in cash. Thereafter, you can take the input tax credit of it. So this is what the first concept, which is regarding manner of utilization of input tax credit. So coming to the next one, the next most important area from the examination point of view, which is going to be blocked credit. Without a question from the blocked credit, there will not be a question paper. If you are not writing this 17 subsection 5, if in your answer sheet, if you are not writing 17 subsection 5, then you are not writing the GST paper. Why? Because in the GST, there will be compulsorily a question related to the blocked credit. So let us try to understand what and all are the different circumstances where the credit will be blocked. So what is basically the concept of blocked credit? Government has identified certain goods, certain services mainly, on which you will not be able to take input tax credit. As we all are aware, two conditions we have. In order to avail input tax credit, we must be a registered person. We must be using that goods or services in the course of furtherance of the business, or we have an intention to use it in the course of furtherance of the business. That is what 16 subsection 1 says. So you must be a registered person, and whatever inward supplies that you have procured, that must be used for in the course or furtherance of the business, or you must have an intention to use it in the course or furtherance of the business. In addition to that, 16 subsection 2 tells various conditions which are required to be fulfilled in order to avail the input tax credit. So various conditions are there. Like quickly, if I have to take you through the conditions, that conditions also I will quickly take you through it, because this is also important area. So what and all are the conditions which are required to be fulfilled for claiming ITC? Number one, you should be in possession of a tax paying document. Some tax paying document you must have it. Either that could be a tax invoice, a debit note, revised tax invoice, or it could be a self invoicing generated in the case of RCM supplies. You must have a tax paying document. Then that details should be reflected in your GSTR 2B. Whatever ITC that you wanted to take, those details must be reflected in your GSTR 2B. That is the second condition. You must have actually received the goods or services. In order to avail the input tax credit, you must receive the goods or services. So if you have not yet received the goods, you have to wait till you receive that goods, till you receive the services in order to avail the input tax credit. However, in case of bill to ship to transactions, it will be deemed that you have received the goods. In case of bill to ship to transaction, even though you have ordered your supplier to send the goods to the third party, it will be deemed as if you have received it, and you can avail the ITC. And one more condition, if you see here, that details whatever that ITC whatever has been communicated to you in your GSTR 2B should not be restricted. There should not be any restriction on GST which has been communicated to you in your GSTR 2B. And thereafter, tax whatever is there, that should have been actually paid to the government. The supplier should have actually paid the amount of tax to the government. Then only you can avail the input tax credit, or else you will be required to reverse it. And one more thing here, you should file the return. In order to avail that input tax credit, you have to file the return under that section number 37, which is nothing but GSTR 3B. You will be required. Section number 39, GSTR 3B, you will be required to file it in order to avail the input tax credit. See, my main objective is not this. This is not the main thing which I wanted to explain. The main thing which I wanted to explain is blocked credit. But just since these things are also important, I am making you recollect these things. So whatever conditions I have read now, all that conditions you are required to fulfill in order to avail the input tax credit. So sometimes what will happen is, you will be a registered person, you are procuring the inward supplies, and you are using it in the course or furtherance of the business, or you have an intention to use it in the course or furtherance of the business, but still the department will block the input tax credit. That means they will not let you take the input tax credit. Sir, what are that inward supplies on which ITC will be blocked? All that discussion has been contained in 17 subsection 5. Let us try to have a quick look what and all are that goods or services on which ITC will be blocked. First one, motor vehicles designed to carry passengers. Motor vehicles for transportation of persons having a seating capacity of less than or equal to 13, which we call it as ineligible motor vehicle. So if you are a registered person, if you are purchasing a motor vehicle which must be designed to carry passengers, it must have a seating capacity less than or equal to 13, then ITC will be blocked. Which means if you are purchasing motor vehicle designed to carry goods, no ITC restriction, you can avail ITC. If you are buying a motor vehicle designed to carry passengers but you have a seating capacity of more than 13, then also more than or equal to more than 13, then also you'll be able to enjoy the ITC. So restriction is there only when the motor vehicle is designed for transportation of persons with a seating capacity of less than or equal to 13. ITC is blocked. But however, if you are using it for eligible purposes, then you can claim the ITC. Exceptions. If you are buying an eligible motor vehicle, but if you are using it for eligible purposes, then you can avail the input tax credit. Sir, what are that eligible purposes? If you are using it for the purpose of making a further supply, you purchased a motor vehicle, like you purchased a car, you are using it for making a further supply. So, or you are making a taxable supply of transportation of passengers. You are buying a motor vehicle with the intention of providing taxable supply of transportation of passengers. You can avail ITC. Similarly, if you are making a taxable supply of imparting training or driving of such motor vehicle, if you are buying a motor vehicle designed to carry passengers, that is ineligible motor vehicle. But if you are using it for providing the services of imparting the driving skills, that is basically you are running a driving school, then also you can avail the input tax credit. So these are the exceptions when you can avail input tax credit. So this is the first blocked credit. Now coming to the next one, next item on which ITC will be blocked is vessels and aircrafts. So vessels and aircrafts, even if you are purchasing a vessel and aircraft also, then also ITC will be blocked. But however, here also there are some exceptions. If you are buying a vessel or aircraft, but if you are putting it for eligible purposes, if you are using it for eligible purposes, then you can avail the input tax credit. Sir, what are that eligible purposes? Number one, same. The list looks more or less the same. If you are making a further supply of such vessel or aircraft, if you are making a taxable supply of transportation of passengers using that vessel or aircraft, if you are making a taxable supply of imparting or training or navigating such vessel, or importing trying or flying such aircraft. Basically, for vehicles we say driving, for vessels we say navigating, for aircraft we say flying. Apart from that, one more point has been added here. If you are using that vessel and aircraft for transportation of goods, then also you can avail the input tax credit. Clear? So this is the second blocked credit, vessels and aircrafts. But if you are using it for these eligible purposes, you can avail the input tax credit. Then third point, what they say here is, if I have to put it in very simple terms, is third point. If you are purchasing a motor vehicle, ineligible motor vehicle, if you are purchasing a vessel or aircraft, if on that purchase ITC is blocked, if you purchase a motor vehicle or vessel or aircraft, if for you ITC is blocked, even whatever expenses you are incurring on general insurance, servicing, repairs and maintenance, on that if you have paid the GST, even on that services also you can't avail the input tax credit. If ITC is blocked on motor vehicle, if you are a person, if you are a registered person, if you are purchasing a motor vehicle or vessel or aircraft, for you if ITC is blocked, even on that motor vehicle, vessel or aircraft, whatever expenses you are incurring in the form of general insurance, servicing, repair and maintenance, even on that you would have paid the GST, that GST also you can't avail it as input tax credit. Simple logic here, if you are able to avail ITC on motor vehicle, vessel or aircraft, even you will be able to avail the ITC on its general insurance, services and repair charges also, as simple as that. However, one more thing also they have told, there are few more cases where you can avail ITC. So exceptions, even when that general insurance, services, repair and maintenance services, when they are received by manufacturer of ineligible motor vehicle, vessels or aircrafts, then they can enjoy input tax credit. Like if, for example, if Tata Motors is taking a insurance on their cars, can they enjoy ITC? Yes. Similarly, even if such services are received by supplier of general insurance services in respect of ineligible motor vehicles or vessels or aircrafts insured by them, then also they can enjoy input tax credit. That means even general insurance company which is providing that insurance, if they are receiving these services in respect of the vehicles, vessels or aircrafts which they have insured it, then also they can enjoy input tax credit. So simply put it, if I have to give you one summary, if you are eligible to take ITC on motor vehicle, vessel or aircraft, you will become eligible to take the ITC on the services relating to its general insurance, services, repair and maintenance. In addition to that, manufacturer of ineligible motor vehicle, vessel and aircraft can avail ITC. In addition to that, supplier of general insurance services also can avail ITC in general insurance, servicing, repairs and maintenance on the vehicles, vessels or aircrafts which they have insured it. Next, so not just buying, even they say one more point here, if a vessel, if a motor vehicle, vessel or aircraft, if you purchase it, if ITC is blocked for you, even if you take it on lease or rent, then also ITC will be blocked for you. If you purchased a motor vehicle, vessel or aircraft on which ITC is blocked, even on leasing or renting of that motor vehicle, vessel or aircraft also ITC will be blocked for you. You can't avail the ITC. However, certain exceptions are there. So what are that exceptions? Here also that logic will become applicable. In case if you are able to enjoy the ITC for a purchase of motor vehicle, vessel or aircraft, then on renting of that motor vehicle or vessel or aircraft also you can enjoy ITC. In addition to that, some extra exceptions are also there. If you are leasing, renting or hiring a motor vehicle, vessel or aircraft, and if you are engaged in making the same outward taxable supply, or if you are using it as one of the element of composite or mixed supply, then also you can enjoy input tax credit. One exception they have told. So if you are renting, if you are leasing or renting of motor vehicle, vessels or aircraft, why you are renting it out? Because why you are receiving that services? Because you are also engaged in making same line of outward supply, or that input service you are using it as one of the element of your outward supply, outward composite or mixed supply. So then you can enjoy ITC. Not just that, if these leasing, renting or hiring of motor vehicle, vessels or aircrafts, if they are received by the employer, why? Because these services are to be provided by the employer to its employees under a statutory obligation. Statutory obligation is must here. If you are an employer, you are required to provide that cab services etc. to your employee, and it is a statutory obligation. That's why you are leasing or renting a motor vehicle. Can you enjoy ITC? Yes, you can enjoy the input tax credit. So this is what regarding leasing, renting or hiring of motor vehicles. With this, we have completed all the blocked credit related aspects of motor vehicles, vessels and aircrafts. Coming to the next few areas where ITC will be blocked is food, beverages, outdoor catering, health services and other services. ITC will be blocked on this. So if you specifically look into it, food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance services, these are ITC blocked services. However, here also they have given one exception. If you are a person receiving any of these goods or services, and if you are engaged in making a same kind of outward supply, or if you are going to use it as one of the element of a composite or mixed supply, then you can enjoy input tax credit. That is what this exception. Then membership of a club, health and fitness center, you can never avail ITC on it. Travel benefits extended to employees travel benefits if the company is extending to their employees on vacation, such as leave or home travel concession. On that also ITC will not become available. However, they say one point here: if any of these services are procured by the employer because they have to provide that to their employee under some statutory obligation, then ITC will be allowed. These three things here: this food, beverages, healthcare, outdoor catering, similarly membership of a club, travel benefits extended to employees. If these services are procured by an employer because they have to provide the same to their employee under some statutory obligation, then that employer can take the input tax credit. Next one, we have some cases in relation to immovable property. We have some blocked credit in relation to immovable property. So in relation to immovable property, I will try to cover it in one single scenario. So they say that in case if you are receiving some services in relation to immovable property, sir, what kind of services, sir? If you are receiving works contract services in relation to immovable property, or if you are doing self construction of immovable property, if you are doing self construction of immobile property, either if you are receiving works contract services in relation to immobile property, or if you are doing self construction of your immobile property. Sir, what do you mean by self construction of immobile property? That means you are not receiving the works contract service, you are receiving the goods separately, you are receiving the services separately, and you are doing the construction of the immobile property on your own. So either if you are receiving works contract services in relation to immobile property, or you are doing the self construction of immobile property on your own account, where you buy the goods separately, receive the services separately, then they say that ITC is blocked for you. You can't avail ITC on that works contract services, or you can't avail that ITC on goods or services which you have procured it for the purpose of self construction of immobile property, subject to some exceptions. There are some exceptions. In some cases, you can enjoy the ITC even on that works contract services or self construction of immobile property. What are that exceptions? Number one, if that expenditure does not qualify as capital expenditure, that means if it is getting treated as revenue expenditure as per the accounting standards in the books of accounts. If that expenditure, whatever you have incurred on works contract, whatever you have incurred on self construction of immobile property, if it doesn't fulfill the criteria of capital expenditure, if it is getting recognized as revenue expenditure in the books of accounts, then you can enjoy the input tax credit. Number two, if you are using it for the purpose of plant and machinery, if whatever immovable property that you are constructing, if that falls under plant and machinery definition, then also you can enjoy input tax credit, even though capitalized. But if it is falling under plant and machinery definition, you can enjoy the input tax credit. Then if the recipient is also in same line of business, then also they can enjoy the input tax credit. Just these three exceptions you have to remember. So on works contract services, on immobile property, works contract services, or self construction of immobile property, generally ITC will be blocked. But in these three circumstances, you can enjoy ITC where it is getting qualified as revenue expenditure, and it is the immobile property which you are constructing falls under eligible plant and machinery, and if the recipient is also in the same line of business, then you can enjoy the input tax credit there. So here one important thing which you have to remember is what is the meaning of plant and machinery. In that plant and machinery also, what is excluded in the plant and machinery, you have to be very important. Here they can twist it and pose you a question in the form of MCQs. So what is excluded from the plant and machinery definition? Land, building, civil structure, telecommunication towers, and pipelines laid outside the factory premises, they will never fall under plant and machinery definition. Since they are falling outside of the plant and machinery definition, on this ITC will be blocked, either if you are getting works contract services or you are doing self construction. So whatever is excluded from the plant and machinery definition, on that you can't avail ITC. Okay, right. Next we have inward supplies. Now coming to the next few categories of goods or services on which ITC will be blocked is if you are receiving inward supplies which are chargeable to tax on composition levy. That means if you are buying the goods or services from a composition dealer, then you can't avail ITC. Why? Because the person, if the seller is a composition dealer, he will not charge any GST from you. He will not give you tax invoice. He will give you bill of supply. So that's why the person, whoever is buying the goods or services from a composition dealer, they can't avail the ITC. Next one, inward supplies received by a NRTP. If you are a NRTP, even on the goods or services, whatever you have procured, you can't enjoy input tax credit except for tax paid on imported goods. When you, on the imported goods, you would have paid the tax, only that you can take it as ITC. Apart from that, locally procured goods or services or imported services, on that you can't avail the input tax credit. Then input supplies used are intended to be used for CSR related activities. If you are receiving any inputs or input services which you are going to use it for the purpose of corporate social responsibility, for fulfilling your obligations under CSR responsibilities, then also you can't avail the ITC. Then we have inward supplies which are getting used for personal consumption. If you are not using it for personal, if you are not using it for business purposes, if you are using it for personal consumption, then you can never ever avail the ITC on it. Then free samples, gifts lost or goods stolen, etc. If you are distributing the goods as free samples, you can't avail ITC. If you are distributing distributing the goods as free gifts, can't avail ITC. If the goods are stolen, ITC is also gone. If the goods are destroyed, ITC is also destroyed. So you can't do it. Simple logic here. If you have output tax liability, then you can enjoy input tax credit. If there is no output tax liability, you can't enjoy the input tax credit. Next one. So coming to one more thing, tax paid in fraud cases, detention and confiscation. So these are all the various cases where you can't avail the input tax credit under 17 subsection 5. Okay, so the first few things are very important from the examination point of view. That thing related to motor vehicles, vessels and aircrafts, immobile properties, and also this aspect of this food and beverages, that like that we have some services. No, these three are very important, very frequently tested from the examination point of view. Okay, right. So one more exceptional topic we have covered. Now we will come to the next important aspect, which is value of supply. As you all are aware, without a question from value of supply chapter also, there will not be a question paper at all. So let us try to do that value of supply chapter. Value of supply chapter, since it is a very small chapter, here there is no, I am not going to be choosy here. I will try to explain everything. I will try to cover every important aspect from this value of supply chapter. Why? Because the discussion itself is very, very limited. So as a part of this value of supply chapter, we are only required to cover 3 sections. What are the 3 sections? 15 subsection 1, then we have 15 subsection 2 and 15 subsection 3. Only 3 sections we have to cover: 15 subsection 1, 15 subsection 2 and 15 subsection 3. If we could cover these 3 sections, that's all. Value of supply chapter will become over, and compulsorily there will be a question. Compulsorily there will be a question. So let us try to understand first with 15 subsection 1. Sir, what does 15 subsection 1 say? 15 subsection 1 says that whenever the supply is happening between two unrelated persons, whenever the supply is happening between when the supplier and recipient both are unrelated, and where price is the sole consideration, price is the only consideration, apart from that no other consideration you are getting. So when buyer and recipient, that is supplier and recipient, both are not related and price is the sole consideration, then transaction value itself we will treat it as value of supply. Then the value of supply itself will be treated as what? Transaction value. Okay, but in order to use the transaction value, what are the 2 basic conditions? Buyer and supplier and recipient should be unrelated with each other, and price must be the sole consideration. There should not be related parties, and apart from price, apart from money, whatever you are receiving, there should be no other consideration. If these 2 conditions are fulfilled, you can start with the transaction value. Transaction value will be treated as value of supply. Sir, but what is this transaction value? What is the meaning of transaction value? The meaning of transaction value is price paid, or price actually paid or payable for the said supply. So for making that supply, for the said supply of goods or services, whatever price which you have actually paid, or whatever price you are required to pay, which is payable, that we call it as a transaction value. So in case of transaction between 2 unrelated persons, and when price is the sole consideration, the starting point, value of supply will be treated, transaction value will be treated as value of supply. This is what 15 subsection 1 says. Now 15 subsection 2 says that, okay, you will start with the transaction value. You will start with transaction value. You will consider that transaction value as a value of supply. But we will not accept that for valuation purposes. To that transaction value, you are required to make some additions. You are required to include. So to that transaction value, you are required to make some additions under 15 subsection 2 to arrive at the ultimate value of the supply. So what and all are that items which are required to be added to the transaction value? There are 5 items. 15 subsection 2, clause A, clause B, clause C, clause D, like that 5 items we have. These 5 items are required to be added to the transaction value to arrive at the value of the supply. So let us try to understand it. What and all are that items which are required to be added? Number 1, any taxes, duties, cesses, fees and charges levied under any law for the time being in force other than CGST, SGST, UTGST and GST compensation cess along with IGST. So if the supplier is collecting from you, apart from the consideration, if he is collecting from you any tax, any duty, any cess, any fee, any charge under any law for the time being in force, except CGST, SGST, IGST, UTGST or GST compensation cess, that tax is required to be added. Any tax collected by the supplier. Only when collected, guys. Sometimes in the examination they will try to confuse you. They will say that there is a tax which has been paid by the supplier to the government, but that supplier did not collect that amount of tax from the recipient. Don't add it. Only when the supplier has collected the amount of tax from the recipient in addition to the transaction value, then only you are required to add it. Now here there is one important clarification here. Sir, TCS, in some transactions, TCS under Income Tax Act, TCS under Income Tax Act will be collected by the supplier, sir. Should that TCS under Income Tax Act also be added to the value of supply? Answer is no. There is a clarification which was recently given. So there, in case if the supplier is collecting from the recipient, the TCS under Income Tax Act, that should not be added. Why? Because TCS is not in the nature of tax, it is in nature of interim levy. Like that, they have given one clarification. It is not in the nature of tax, it is in the nature of interim levy. So that's why TCS collected under Income Tax Act should not be added. Then one more thing which should be added: any amount that supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of supply in relation to the supply. So in relation to the supply, whatever is happening, let us say for example, supplier agreed to make some supply to the recipient. So let me try to put it this way here. This I will explain a little deeper manner. Supplier has agreed to make some supply to the recipient. For that, recipient is required to pay some consideration. But in relation to that supply, supplier is required to make some payment to a third party. There is one third party. To that third party, in relation to that supply, you are required to make some payment. Supplier is having an obligation to make a payment to the third party in relation to the supply. But instead of supplier, recipient has made that payment to the third party. Recipient has made a payment to the third party. So let us say for example, supplier is making some supply of services. Okay, for that consideration we have agreed. In relation to that supply, there is one third party to whom supplier is owing some money. Let us say for example, he is owing some 10,000 rupees. This is actually whose obligation? Supplier's obligation. But instead of supplier paying that money, recipient has made that payment to the third party. And ultimately what is the amount recipient paid to the supplier is 90,000 rupees only he has paid. See, price actually paid or payable, here transaction value becomes only 90,000. But under 15 subsection 2 clause B, you are required to add that 10,000 rupees. Why? Because this is a payment made by the recipient to the third party, which is actually the supplier's obligation. So whatever amount supplier is required to pay to the third party, instead of supplier paying it, recipient has made that payment. That should be added to the value of supply under 15 subsection 2 clause B. Clear? So this is what one more addition which you are required to do it. Now, coming to the third point, incidental expenses including commission, packaging charged by the supplier to the recipient of supply, and any amount charged for anything done by the supplier in respect of the supply of services which is done at the time of or before delivery of goods or supply of services. So in addition to the transaction value, if the supplier is collecting from you any commission, any packaging, installation charges, testing charges, inspection charges, any other incidental expenses for anything done by the supplier to the recipient, anything done by the supplier at the request of the recipient at the time or before delivery of the goods or supply of services. So this is very important here. There will be one question which you might have solved it. If you have solved that questions, you will be able to find. I have given one question in the question bank where, let us say for example, you have delivered the goods. After delivering the goods, the recipient has asked you to perform the inspection. After the goods are delivered, let us say for example, you are selling the goods to the recipient amounting to 1 lakh rupees. The goods are delivered. After the goods are delivered, the recipient has requested you to do the inspection charges. So you have done the inspection charges and collected 2,000 rupees extra. Should that 2,000 rupees be added to the value of supply? No. Why? Because sir, it is done by something has been done by the supplier at the request of the recipient. No, agreed. Supplier has done something at the request of the recipient. But in order to get qualified to be added under 15 subsection 2 clause C, that anything done by the supplier is there? No, that should be done either at the time or before delivery of the goods or supply of the services, not after delivery of the goods or after supply of the services. Understood? So this point you try to keep in mind. If something is done by the supplier at the request of the recipient after the delivery of the goods or services, then you can't add it to the transaction value. Clear? Next, coming to the next point. So this is what regarding C point here. Then we have fourth item which is required to be added to the value of supply is interest, late fee, penalty for delayed payment of any consideration for any supply. So let us say for example, you made a supply to a recipient. You are charging the consideration amounting to 1 lakh rupees. You gave the recipient credit period. So let us say you told him you are required to make the payment within 3 months of time. You are required to make the payment within 3 months. If you are not making the payment within 3 months of the time, so recipient is required to make some payment of interest. Recipient is required to make the payment of interest or late fee or penalty. Sir, this recipient has not made the payment within 3 months, sir. So that's why supplier is collecting extra 10,000 rupees as interest, late fee or penalty. Should it be added to the value of supply? Yes, it should be added to the value of supply. Should it be added to the value of supply? Yes, it should be added to the value of supply. So any amount of interest, late fee, penalty for delayed payment of any consideration for any supply should be added to the value of supply under 15 subsection 2 clause D. It must be added. Understood? Clear and comfortable? But one point you have to remember here, the linking here is time of supply. It will be added to the value of supply, but when you will be liable to pay the GST on that interest, late fee or penalty is as per the time of supply provisions when you have actually received it. It should be added to the value of supply, agreed, but you are not required to make the payment of it along with the supply. That GST payment you need not make it on interest at the time of making supply. Why? Because you don't know whether recipient will make the interest payment or not. You don't know. If he comes back and makes the payment within 3 months, he will not pay me any interest. If he doesn't pay me within 3 months, then he will pay me the interest. So that's why I don't know whether I will get that 10,000 rupees of interest or not. So that's why the time of supply will be when you actually received it. On that 10,000 rupees, you will be liable to pay the GST when you received it, not when the sale has taken place. Okay, next. So this is what regarding 15 subsection 2 clause D. Now we have 15 subsection 2 clause E, which says that subsidies which are directly linked to price. So what they are saying, subsidies which are directly linked to price, excluding subsidies provided by the central government or state government. So in case, in relation to the supply, let me put it this way, there is a supplier who made some supply to the recipient at 10,000 rupees. In relation to that supply, if the supplier is receiving a subsidy, in relation to that supply, if the supplier is receiving a subsidy, let us say for example, for each item sold, if 2,000 rupees of subsidy he is receiving, that 2,000 rupees also should be added to the transaction value, provided that subsidy should be price linked subsidy. Two conditions. That subsidy should be price linked subsidy, and that subsidy should be given by other than central government or state government. That subsidy should be given by other than central government or state government. If these two conditions are satisfied, if the subsidy is a price linked subsidy, if it is given by other than central government or state government, then you can add that subsidy. Then you have to add, not can, you have to add it to the transaction value and arrive at the value of supply and make the payment of GST on it. Clear? Able to understand? So someone has texted me in the chat box, sir, if recipient received such amount from supplier, then we need to deduct or should not consider. If the recipient has recovered that amount from the supplier, then we need to deduct or should not consider. See, if the recipient has, generally this is a hypothetical scenario. What do you mean by if the recipient is returning back to the recipient? In that case, he would have added it to the original invoice. In that case, he would have added it to the original invoice. So like that, in case if it is refunded back, no, it might not be required to be added. It is just a temporary adjustment, like you have collected it, you have paid it to the third party, immediately supplier came back and reimbursed it to you, then it need not be added. Why? Because it is a temporary payment. Okay, right. So let us come back to the discussion. So yeah, 15 subsection 2 clause B we have covered. 15 subsection 2 we have covered. What and all are the additions which are required to be made to the value of supply. Then we have 15 subsection 2 clause C, which is talking about discounts, a treatment of discounts. What will happen to the discounts? What is the treatment of discounts? And 15 subsection 2 says that. 15 subsection 3 here, sorry, I gave you the wrong reference. 15 subsection 3. 15 subsection 3 will talk about discounts. What will be the treatment of discounts? So 15 subsection 3 says that there will be two kinds of discounts. One is those discounts which are recorded on the invoice itself. For the simplicity, I will call it as a pre-supply discounts. And there will be something called post-supply discounts. Sir, what are pre-supply discounts? Those discounts which are given at the time of making supply and which are duly recorded on the invoice. Sometimes when you go and purchase a goods or services, the supplier will give you discount. That discount will be given at the time of making supply only, and that discount will be duly recorded on the invoice also. That discount will be recorded on the invoice. So those invoices, those discounts, we call them as pre-supply discounts, and those pre-supply discounts will be allowed to be deducted from the value of supply. Why? Because they are given at the time of making supply and it was duly recorded on the invoice. No need to pay the GST on it. That pre-supply discount which is duly recorded on the invoice can be excluded from the value of supply without any issue. Then there will be something called post-supply discount. That means at the time of making supply, the discount has not been given. The discount is given at a later point of time. The discount has been given after the supply has taken place. That we call it as post-supply discount. Sir, what about the post-supply discounts? So when it comes to post-supply discounts, they are allowed to be deducted from the value of supply. Yes, even you can deduct them from the value of supply, provided if three conditions are satisfied. Provided three conditions are satisfied. So what are that three conditions? Number one. What are the three conditions? Condition number one, so that there should be an agreement. The supplier should have agreed to give the discount. There should be an agreement to give the discount at the time of making supply. Number two, we should be able to calculate the discount invoice wise. We should be able to calculate the discount invoice wise. Number 3, recipient should have reversed the proportionate input tax credit. Recipient should reverse proportionate ITC. If all these 3 conditions are satisfied, then even post supply discounts also can be allowed as deduction. Clear? So 2 things here. In case of pre-supply discounts, nothing to check. That discounts will be completely allowed to be deducted from the value of supply. Sir, what about post-supply discounts? Those discounts which are given at the end of after making the supply, in order to be allowed to be deducted from the value of supply, 3 conditions are required to be deducted. 3 conditions are required to be fulfilled. What are that 3 conditions? Agreement to give discount should be there at the time of making supply, and we should be able to calculate the discount invoice wise, and the recipient should be allowed to reverse the proportionate input tax credit. Okay, clear everyone? So this is what regarding post supply discounts. And one more clarification, some CBIC circulars I wanted to explain it here related to value of supply. So one is NCB, no claim bonus. Sir, can no claim bonus be no claim bonus? Insurance companies, what they will do is at the time of renewal of the insurance policy in the last year, if you did not make any claim, in the last year, if you haven't made any claim, they will give you some discount called no claim bonus, which will be recorded on the invoice, which will be recorded on the insurance premium invoice. And the question which come to the department is whether that no claim bonus is allowed to be deducted from the value of supply. Yes, no claim bonus can be deducted from the value of supply because it will be a pre-supply discount only, because it is duly recorded on the invoice. So no claim bonus can be happily deducted from the value of supply. That's what the circular given by the GST department. Understood? That's all. So with this we have completed important aspects from value of supply chapter. Clear? Right. See, students are overloading this chat box with the questions. So please do hold on, because we have many concepts to cover. If I start answering each and every question, the time will not permit me. See, please listen carefully. We will try to cover it. So if time permits me at the end of the chapter, I will try to reply back to your comments, or even after the completion of the video also, if the time permits me, I will definitely reply back to you. But if you start texting it now, the main content gets diluted. So because doubts could take some amount of time, it is not the proper time, I guess. So let us try to complete the concepts first. Next. The next concept which I want to pick now is section 12 of the IGST Act, which is talking about place of supply for services. How to determine the place of supply in case of supply of services. This is also one such area where the questions are getting frequently tested. So I wanted to cover that section number 12 of the IGST Act, which is talking about how to determine the place of supply in case of supply of services. That we will try to cover it. Section number 12 of the IGST Act we will try to cover. Come on. Right. So we'll try to do this. Section number 12. So if you understand the structure of the section number 12 of the IGST Act, section number 12 of the IGST Act will talk about how to determine the place of supply in case of supply of the services where the location of the supplier and the location of the recipient both are in India. Then how to determine the place of supply, that will be covered under section number 12. So 12 subsection 1 says applicability. If you understand the structure of section number 12 here, section number 12 subsection 1 says that whenever there is a supply of service happening where the location of the supplier and the location of the recipient both are in India, then you follow section number 12. That's what 12 subsection 1 says. Now coming to the remaining structure, 12 subsection 2 is a default. 12 subsection 2 is a default provision. What is default provision? So where how you have to check is, in case if you are making supply of services, first you have to go and check starting from 12 subsection 3 till 12 subsection 14, you have to go and check, is your supply getting covered anywhere? Is your supply getting covered anywhere under from 12 subsection 3 to 12 subsection 14? Yes, if your service is getting covered under any of that 12 subsection 3 to 12 subsection 14, you will be governed by the respective provision. Like for example, if you are making a renting of immobile property, for that we have a dedicated subsection 12 subsection 3. You have to follow whatever guidance that has been given under 12 subsection 3 for the purpose of determining the place of supply. If you are providing insurance services, for insurance services we have a dedicated subsection. You have to follow that dedicated subsection to determine the place of supply. If you are making some supply of service which is not getting covered anywhere starting from 12 subsection 3 to 12 subsection 14, if you are making some supply of service which is not getting covered anywhere starting from 12 subsection 3 to 12 subsection 14, then you have to come to the default provision 12 subsection 2. You have to come and verify 12 subsection 2 will become applicable. So what is that default? First we will try to have a look at it. Sir, what is that default provision, sir? So in case if the recipient is registered, location of the recipient. If it is a B2B supply, location of the recipient will always become place of supply. If the recipient is unregistered, if it is a B2C transaction, if address is available in the records of the supplier, if address of the recipient is available in the records of the supplier, then the location location of the recipient. If address is not available in the records of the supplier, then the location of the supplier will become place of supply. This is one default rule. So very simple. If the recipient is registered, that is if it is a B2B transaction, location of the recipient. If it is B2C, if the location of the recipient is available, location of the recipient. If not available, location of the supplier. So now coming to the next specific clauses. So this is what regarding general clause. Now we will talk about the specific clause. 12 subsection 3. It talks about services in relation to immobile property or lodging, accommodation in a hotel, boat or vessel, etc. So services either in relation to immobile property like construction services, architect services, interior designing services, real estate agent services, all that will get covered under 12 subsection 3. Or lodging or accommodation in a hotel, boat, vessel, these are also getting covered under 12 subsection 3. Now what does 12 subsection 3 say? What is the place of supply? They say that in case if the immobile property which you are if the immobile property in relation to which you are providing the services, if it is located in India, if the immobile property is located in India, then place location of that immobile property, either location or intended location of such immobile property or boat or vessel, it will become the place of supply. If you are providing services in relation to immobile property or lodging or accommodation services are getting provided in relation to a immobile property which is located within India, then location of the immobile property will become the place of supply. However, if the immobile property is located outside of India, then the location of the recipient will become the place of supply. So very simple. If the immobile property is located in India, location of the immobile property. If the immobile property held outside of India, then the location of the recipient will become the place of supply. See, sometimes what will happen is the immobile property regarding which you are availing the services, that might be spread across multiple states. Sometimes you might be receiving the services in relation to immobile property, but that case, just keep it. Sometimes you might be receiving the services in relation to immobile property, but that immobile property related services might be spread across multiple states. Then you have to bifurcate the value of the supply to each state. In case you might be receiving services in relation to immobile property, but that immobile property related services you might be enjoying it in more than one state. So then you have to bifurcate the entire value among different states to determine the place of supply. So how to do the bifurcation? So in case if the immobile property is located in more than one state, then first you have to check the contract or agreement. In the contract or agreement, whatever they have told you in the contract or agreement, if there is a clear bifurcation for each state, follow that. In case if the contract or agreement is silent on the bifurcation, then how you have to apportion. So there could be different cases. In case if you are getting a hotel accommodation, let us say you are paying 50,000 rupees. For that 50,000 rupees, you are staying in a hotel. 3 nights you are going to stay it in Delhi. 2 nights you are going to stay in Jaipur. So in that case, you have to divide this 50,000 rupees of value in the ratio of number of nights stayed in each state. So if I do that, for 30,000 place of supply will become Delhi. For 20,000 the place of supply will become Rajasthan. Now in some cases, a single immobile property will be spread across multiple states. A single immobile property could be spread across multiple states. Let us say, for example, you are taking one vacant land on rent for performing a destination wedding, but this vacant land is spread across 2 states. Some part of the land is in Karnataka, some part of the land is in Tamil Nadu. Single land only, single piece of land, 5 acres of land is there. A part is located in Karnataka, a part is located in Tamil Nadu. For renting out this entire land, you are paying some 1 lakh rupees for one day. So now location of immobile property will become place of supply, but that immobile property is spread across multiple states. Now what I should do, sir? You have to divide it on the basis of area. You have to divide it on the basis of area of the immobile property in Karnataka, area of the immobile property in Tamil Nadu. You have to determine in that ratio, you have to divide that value. In case if you are availing the accommodation services in a boat or a vessel, where it is not going to remain in one state, during your stay, it is going to go through various states. In that case, how to bifurcate the value? In that cases, value will be bifurcated on the basis of time spent by that boat or vessel in each state as declared by the operator. So operator will give a declaration that this boat has spent this much amount of time in this state, this much time. So based on the time spent by the boat as declared by that operator, on that basis you are required to divide the value. Okay, so that is what regarding 12 subsection 3. Now we have 12 subsection 4, which is talking about performance based services like restaurant and catering services, personal growth, personal grooming, fitness, beauty, healthcare services, including cosmetic and plastic surgery. For all these services, the place of supply will be governed by 12 subsection 4, and 12 subsection 4 simply says that the place wherever services are actually performed. The place where the services are actually performed, that will become the place of supply. Then training and performance appraisal services. For performing training services, performance appraisal services, what will be the place of supply? That depends on whether it is a B2B supply or B2C supply. If it is a B2B supply, that is if the recipient is registered, location of the recipient. If the recipient is registered, then it will be location of the recipient. If it is a B2C supply, that means if the recipient is an unregistered person, then the place of supply will be wherever the service is actually performed. So in case of training and performance appraisal services, it depends on whether it is a B2B supply, B2C supply. If the recipient is registered, location of the recipient. If the recipient is unregistered, the place where the service is actually performed, that will become the place of supply. Then coming to 12 subsection 6, services by way of admission to events or amusement parks or other places. If you are getting the services in relation to admission to events or amusement parks or other places, sir, what will be the place of supply? Very simple, wherever the event is actually held or wherever that amusement park or amusement place is located, that will become the place of supply. Then in relation to organizing events, sir, what is the difference between 12 subsection 6 and 12 subsection 7? 12 subsection 6 is admission to event. Like for example, a concert is happening, they're selling you the tickets. So for that, what is the place of supply? That will be depending on 12 subsection 6. If there is an event organizer who will organize that event, then it will come under 12 subsection 7. So what will be the place of supply in case of event organization services? Here also they say that it depends on the location of, it depends on the status of the supply. If the recipient is registered, location of the recipient, always, whether the event is held within India, event is held outside India, doesn't matter. If the recipient is registered, always and always location of the recipient. If the recipient is unregistered person, then we have to see where the event is held. If the event is held in India, location wherever the event is held. If the event is to be held outside of India, location of the recipient will become the place of supply. More or less similar to immovable property related services only. But they have added one more layer here, is the recipient registered or unregistered. So that's what they say here. In case of organization of events, if the recipient is registered, location of the recipient. If the recipient is unregistered, then we have to check where the event is held. If the event is held within India, location of the event. If the event is held outside of India, location of the recipient will become the place of supply. Next, sir, in this case, in this typical scenario, let us say if the recipient is unregistered person and if the event is happening in more than one state, then what will happen? Then also you have to divide the value among all the states and union territories. Sir, in which ratio I have to divide? You have to follow as per generally accepted accounting principles. In that case also you will refer to contract or agreement. If in the contract or agreement there is some bifurcation, that we will follow. If there is no bifurcation in the contract or agreement, or if the contract or agreement is silent on the bifurcation, then we will decide it as per the generally accepted accounting principles. Then we have transportation of goods. 12 subsection A talks about transportation of goods. In case of transportation of goods, how to determine place of supply? It also depends on whether the recipient is registered or unregistered. If the recipient is registered, always location of the recipient. If the recipient is unregistered person, location wherever the goods are handed over for transportation, not the destination, guys. Wherever you are taking the goods and handing over for transportation, you will go and hand over to the courier authority. No, sir, please do the transportation of these goods. That place wherever you are handing over the goods for transportation, that will become the place of supply. Next, in relation to passenger transportation services, here also it depends on whether the recipient is registered or not. If the recipient is registered, always location of the recipient. If the recipient is unregistered, wherever the passenger embarks on the conveyance, wherever you are boarding the conveyance, wherever you are boarding onto the conveyance for your journey, that will become the place of supply when the recipient is unregistered. If the recipient is registered, always location of the recipient. And one important point here, in case if you are booking a round trip, to journey, fro journey, both will be treated as two separate journeys. You might be booking a round trip, but still to journey and from journey will be treated as two separate journeys, not as a single journey. And accordingly, two transactions will be there. Two times you have to determine the place of supply. Sir, what if it is a passenger transportation services where you are not directly transporting the passengers, but where you are issuing a right to passage for future use and point of boarding is not known, sir? In that case, sir, what they are referring to? They are referring to this thing. Passes, travel passes and all will be there, right? So in those cases, what will the place of supply? For that we don't have any default, for that we don't have any specific provision. That will go to the default provision. 12 subsection 2. If the recipient is registered, location of the recipient. If the recipient is unregistered, if address of the recipient is available, then location of the recipient. If address is not available, then the location of the supplier. Next, coming to the next one, services supplied on board day conveyance. If you are getting the services on supplying, if the services are supplied on board day conveyance, then first scheduled point of departure. What is the place of supply? First scheduled point of departure will become the place of supply. Then we have telecommunication services. When it comes to telecommunication services, we have a bunch of points. In case of fixed telecommunication line, leased circuits, internet leased circuits, cable or dish antenna. These are all the services which require installation. So in those cases, location wherever that leased circuit, cable connection, dish antenna is installed, that will become the place of supply. Since for these telecommunication services, it will involve installation. So wherever those things are getting installed, that will become the place of supply. Now here we have one point here. So let us say there is a leased circuit. There is a leased circuit. There is one company is getting a leased circuit. So it is having its leased circuit point is starting in Delhi and its ending point is in Mumbai. For this leased circuit, the company is charging 1 lakh rupees, sir. What will be the place of supply? So in this case, since the leased circuit is spread across 2 states, you have to divide it among 2 states. In which ratio? In the ratio of number of points in each state. We have 1 point in Delhi, we have 1 point in Mumbai, in 1:1 ratio we have to divide. Let us say, for example, for the leased circuit starting in Delhi, and in Pune also there is 1 point, Mumbai also in 1 point is there. So in that case, how to divide it? Now in Delhi you have 2 points, and Pune and Mumbai both are forming part of Maharashtra. You have 2 points. This 1 lakh ratio has to be divided in the ratio of 1:2. So like that, if the leased circuit and all is spread across multiple states, like this you have to divide it. Then when it comes to postpaid mobile connection internet services, if the location of the billing address is available, that location of the billing address of the recipient, if not, location of the supplier. Then we have prepaid mobile connection internet services, DTH services. Now these services can be provided through different modes. In case if they are getting provided through a selling agent, reseller or distributor of SIM card or recharge voucher, then address of the selling agent, reselling or distributor at the time of supply. If they are getting provided through these agents, then address of the selling agent or reseller or distributor will become the place of supply. Or services provided by any person to the final subscriber. Now these agents will provide the services to final subscriber. What is the place of supply? Location where such prepayment is received. These two are irrelevant. What is relevant today is prepaid services, the payment for which is made through internet banking or other electronic mode. This is what most common among us today. For this, what will be the place of supply? For these services where prepaid services only, but where the recharge we are doing it by way of electronic mode. In that case, location of the recipient will become the place of supply. If any other cases are there, if the address of the recipient is available, then the address of the recipient. If not available, location of the supplier. Then we have financial and stock broking services. Very simple. Place of supply will be location of the recipient as per the supplier's records. In case if the location of the recipient is not available, then the location of the supplier. So here we have one common question which they ask is, let us say for example, you are a resident of Andhra Pradesh. You went to some Delhi. In the Delhi, you went to one of the branches, one of the banks, and there you are getting the DD. There you are getting a DD. DD will be provided to non-account holders also. Now in this case, you are not a resident of that state. You went to another state. There you have got the DD services. Your address will not be available in the supplier's records. In that case, location of the supplier, that is Delhi itself, will become the place of supply. Like that, we have few illustrations were quite commonly tested. So I thought of reminding it to you. Then for insurance services, what will be the place of supply? Here also, if the recipient is registered, location of the recipient. If the recipient is unregistered, location of the recipient as available in the supplier's records. If not available, location of the supplier. Even though they have given separate provision, but it is very similar to default provision only. It is very similar to default provision only. Then we have advertisement services provided to government. 12 subsection 14. Here also many students often commit a mistake here. 12 subsection 14 will talk about advertisement services, but not that every advertisement services will be covered by 12 subsection 14. If you read it carefully, only advertisement services which are provided to the government will get covered under 12 subsection 14. Not every advertisement service, only those advertisement services which are provided to government will get covered under 12 subsection 14. And 12 subsection 14 says that in case if you are providing services to central government, state government or any other government related authority, where that advertisement is going to be either published, disseminated or displayed in multiple states, then that value should be bifurcated to each state, union territory, or to each union state or union territory wherever advertisement is getting broadcasted, run, played or disseminated. So if you are providing advertisement services to the government, but that advertisement is getting displayed or published or disseminated in multiple states or union territories, the value must be spread across all that states or union territories. But on what basis you will divide, sir? That we will learn it at the CA final level, not at the CA inter level. Understood? So this is what regarding section number 12 here, how to determine the place of supply in case of supply of services, one of the frequently tested area. Now let us come to the next part. Now I will go to the supply chapter. I wanted to discuss schedule number 1 and schedule number 2. So what is schedule number 1? First of all, schedule number 1 and schedule number 2, these are all part of section number 7. These are all part of section number 7. So if you have a quick recap of the content relating to section number 7. Section number 7, subsection 1 will talk about what are the circumstances in which an activity will be qualified as supply. So section 7, subsection 1, clause A says that when there are goods or services and when some form of supply has taken place for a consideration in the course or furtherance of business, that will qualify as supply under section 7, subsection 1, clause A. So when there is a goods or services and when there are goods or services and when there is some form of supply like goods, sale, transfer, purchase, barter, etc. And also when it is happening for a consideration and in the course or furtherance of the business. When it is happening in the course or furtherance of the business, then it will get qualified as supply. Then we have section 7, subsection 1, clause AA, which says that a person other than individual. if they are providing any activities or if they are doing any transaction to its members or constituents, to its members or constituents, or vice versa. A person other than individual is providing services to its members or constituents, or members or constituents are providing some activities or services to the person other than individual for a consideration, then it will qualify as supply. Then also it will qualify as supply. Basically, the services provided by clubs to its members and all will get qualified as supply. Then we have section 7 subsection 1 clause B, which says that if you are importing services, if you are importing services for a consideration, there is a consideration for that, whether or not in the course or furtherance of the business. Here business condition doesn't matter. If you are importing the services and there is a consideration for that, that's all. It will be enough for you to, it will be enough for it to get qualified as supply. We need not check it whether it is in the course or furtherance of the business or not. Thereafter we have section 7 subsection 1 clause C, where they have told there are few activities which will be deemed as supply even if done without consideration. There are few activities which will be deemed as supply, which we also call it as deemed supply. There are few activities which will be deemed as supply if done even without consideration. And what are that activities? Those are mentioned in schedule number 1. So in the schedule number 1, 4 paragraphs are there. In each paragraph they have spoke about one activity. So each of that activity mentioned in schedule 1 will be will be considered as supply even if done without consideration. So we have to remember, we have to revise what are that 4 areas, what are that 4 activities which will be considered as supply even if done without consideration, so that we have to learn it. So let us have a quick look at the supply chapter. Quickly we'll try to do schedule 1. Right. So first one, permanent transfer or disposal of a business asset on which ITC is availed. So what do they say here? If you are permanently transferring or disposing a business asset. So there is a business asset. When I say business asset, it need not be a capital asset. It could be any asset. It could be even stock also. So in case if any business asset is there on which you should have availed input tax credit, if there is any business asset on which you have availed input tax credit, which you are permanently transferring or disposing it without any consideration, even though there is no consideration involved, that permanent transfer or disposal of a business asset on which you have availed input tax credit, that will be deemed as supply and on which you are liable to pay the amount of GST. And here there are few conditions in order to qualify as supply. Number 1, that transfer should be permanent. Transfer or disposal should be permanent. It should not be temporary. And that permanent transfer or disposal of a business asset should be such a business asset on which ITC is availed. In case if there is a business asset on which you have not availed ITC, or if there is a business asset on which ITC is blocked, if that you are permanently transferring or disposing it, it will not be qualified as supply if done without consideration. So 2 conditions, the transfer should be permanent and the business asset should be such a business asset on which ITC should have been availed. Then only that will be deemed as supply. Next one, second activity, supply between related persons or distinct persons. They are telling supply. Supply means it could be supply of goods also, it could be supply of services also. So if there is any supply of goods or supply of services between related persons or between distinct persons, then it will be deemed as supply even without consideration. First of all, who is related person? They have given the definition here. This related person definition you have to remember. If they are officers or directors of one another's business, then they will be deemed to be related persons. So officers or directors of one another's business, they are legally recognized partners, employer and employee, and a third person controls, owns or holds greater than or equal to 25% of the voting stock or shares of both of them. So if there is a third person, if he is controlling greater than or equal to 25% of voting stock or shares in 2 entities, then that too will be considered as related. And when it comes to control, 3 points are there. One of them controls the other, a third person controls both of them, or both of them collectively control the third party. If in any way control is happening, you are controlling the other person, you and other are controlled by third party, you and other are controlling a third party, then you will be considered as related. Those are the next 3 points. And also if they are the members of the same family, if the persons are members of the same family, then also they will be considered as related. Sir, what do you mean by family here? They have not given the freedom and scope to determine who is your family, who is not your family. The act is telling these people will fall in your family. That's all. They will fall in your family, whether you like it or don't like it. Sir, who will be that people who will be considered as family? Spouse and children. Spouse and children, whether they are dependent on you, not dependent on you, doesn't matter. Spouse and children will always be considered as related person. Parents, grandparents, brothers and sisters of the person, if they are wholly or mainly dependent on you. So brothers, sisters, parents, grandparents, they will be considered as related only when they are wholly or mainly dependent on you. Spouse and children, whether they are dependent or not, doesn't matter. They will always be related. But these people will be considered related only when they are wholly or mainly dependent on you. Then one more important concept here, distinct person. Sir, what do you mean by distinct person under section number 25? Very simply, if I have to put it, if there are multiple registrations under same PAN, if there are multiple registration under same PAN, either within the same state or union territory or in a different state or union territory, you will be deemed as distinct persons. If a person is having multiple registrations under same PAN, whether within the same state also, if you are having multiple registrations, or in another state you have a different registration. So if there are multiple registrations under same PAN, whether within the same state or union territory or outside of the state or union territory, then you will be considered as distinct persons under section number 25. And also they say one more thing here, establishments of distinct person they will say, which means that if you have a registered place of business in one state, if you have an unregistered place of business in another state, then also they will be deemed to be establishments of distinct person. Let us say, for example, I am running an electronic store in Karnataka, whereas in Tamil Nadu I am running a bar where I am selling an alcoholic liquor for human consumption. My electronic store in Karnataka is registered because it is a taxable supply, whereas whatever bar I am running in Tamil Nadu, it is not taxable supply. So that's why I am not making it registered. That is an unregistered entity, but you both will be treated as establishments of distinct person. So this you have to remember. If you are having multiple registrations under same PAN, either within the same state or different state, distinct person, or you have a registered place of business in one state and unregistered place of business in another state, establishments of distinct person. Now why we are understanding this is, why? Because in para number 2 of schedule 1 they have told that if there is any supply of goods or supply of services happening between two distinct persons under section number 25 or between related persons, even without consideration, it will be qualified as supply, and on that you will be liable to pay the amount of GST. You are required to issue the tax invoice. Everything will become applicable. Next one. But one exception is there here. Sir, employee and employer also are considered as related. No. If the employer is giving a gift to employee, practically it should also fall under schedule number 1 para number 2. No, sir. If the employer is giving a gift to his employee, that is also supply of goods without any consideration, but they are related, it should fall under supply. But they have given one relaxation here. Gifts given by employer to the employee up to a value of 50,000 per employee per year. If the employer is giving a gift to an employee up to a value of 50,000 per employee per year, then it will not be treated as supply. Sir, what if the value of the gift exceeds 50,000? Then it will qualify as supply. Sir, what will be the value of supply? Amount exceeding 50,000 or full gift value? Full gift value. So let us say if the employer is giving a gift of 60,000 rupees to his employee. Sir, gift has exceeded 50,000. So it will be considered as supply? Yes. What will be the value of supply? Entire 60,000, not the amount exceeding 50,000. Don't say 10,000. Entire 60,000 will become the value of supply. Clear? That is para number 2. Now we have para number 3. So what does para number 3 say here is supply of goods, only goods. Para number 3 only talks about goods. In para number 2, for supply between distinct person and related person, they say supply. That means supply of goods also, supply of services also. But for para number 3, they say that if the principal is supplying the goods to the agent, where the agent will make a further supply, or agent is receiving the goods and he will make a further supply to the principal, then supply of such goods between principal and agent, either principal to agent or agent to principal, even if done without consideration, it will qualify as supply. Supply of goods only, not services, my dear students. Supply of goods between the principal and the agent, either from principal to agent or agent to principal, even if done without consideration, it will be deemed as supply. That's all. But however, which agents will get covered under para number 3? Which agents will get covered under para number 3? Only those agents who give the invoice in their own name. Only those agents who are giving the invoice in their own name, those agents only will get covered under para number 3 of schedule 1. If the invoice is given in the principal's name, then those agents will not get covered under para number 3 of the schedule 1. So only those agents who are giving the invoice in their own name, they will only get covered under para number 3. Only to that agents if the goods are supplied without consideration, then only it will be deemed as supply. Sir, will del cred agent, there is one circular here, will del cred agent also will get covered under para number 3? Yes, he will also get covered under para number 3, provided the same condition. If the del cred agent is giving the invoice in his own name, then even such del cred agent also will be deemed as agent under para number 3, and supply of goods between principal and del cred agent also will become supply even if done without consideration. Next one more last area, last paragraph, importation of services. One more last area is importation of services. See, importation of services has been covered under section 7 subsection 1 clause B also, and even para number 4 of schedule 1 also they say something regarding importation of services. I should have one chart for that. Let me show you that. Let me use that for the purpose of giving you the clarity. Where is it? See here. In case if they are asking you question regarding importation of services, how you should decide whether it is supply or not. In case if there is a import of service and there is a consideration, if you are importing the services and there is a consideration, don't check for anything, whether it is in the course or business, furtherance of business, doesn't matter. It will always qualify as supply under section 7 subsection 1 clause B if you are importing the services for a consideration. In case if you are importing the services without consideration, You are importing the services but without consideration. Then you need to check, is that service is getting imported from related person or your own establishment outside of India? If the answer is yes, then ask one more question. Is it in the course or furtherance of the business? Yes. If for these two questions, if you get the answer as yes, then it will get qualified as supply under section 7 subsection 1 clause C, read with para number 4 schedule 1. Read with para number 4 schedule 1. So that's how you have to answer import of services. Many students often confuse here. This is what the chart kind of thing you can follow. If they have asked a question regarding import of services, check, is it for consideration or is it for without consideration? If it is for consideration, it will be deemed as supply, whether it is in the course or business or not in the course or furtherance of the business, as per section 7 subsection 1 clause B. In case if there is no consideration, then you have to ask two questions. If it is from is that import from a related person or is it from an establishment outside of India? If the answer is yes, then you check, is it in the course or furtherance of business? If the answer is yes to that also, then only it will qualify as supply under section 7 subsection 1 clause C, read with para number 4 of schedule 1. Okay, right. So that's all. With this we have completed schedule number 1. Schedule 1 we have covered. Now we will try to understand schedule 3. Sir, what is schedule 3? Those activities which will neither be considered as supply of goods, not even considered as supply of services. Those activities which will be neither considered as supply of goods, not even considered as supply of services. What will be those activities? That also we have to understand. Those activities are given under schedule 3. So let us try to understand what are those activities which will be neither considered as supply of goods, not even considered as supply of services. So what are the schedule 3 activities? Let us try to understand one by one. First one, services provided by an employee to the employer in the course of employment or in relation to his employment. Then it is not treated as supply at all. Employee, if he is providing the services to the employer in relation to his employment or in the course of employment, they will be neither considered supply of goods, not even considered supply of services. But if an employee does something beyond the course of employment, outside of the course of employment, for which he is getting consideration, then it will qualify as supply. Only what will not get qualified as supply? Those services which are provided by the employee to the employer in the course or in relation to his employment. They are considered neither supply of goods, not even considered supply of services. If something is done outside the ambit of employment for consideration, then it will qualify as supply. One important point you have to remember here, from which they can ask a question, non-compete fees. Non-compete fees paid by employer to the employee, will it be supply? Yes. If the employee has agreed not to join the competing business for which employer is paying him some amount, will that be supply, sir? Yes. Why? Because that service is outside the ambit of the employment. That will be qualified as supply. Then second activity which will not be considered as supply, services by any court or tribunal established under any law for the time being in force. Services provided by court or tribunal, if the court or tribunal is providing any services, then it will not be considered as supply. Then functions performed by MPs, MLAs, members of panchayats, members of municipalities and members of other local authorities. Not a supply. Duties performed by any person holding any post in pursuance of the provisions of the constitution in that capacity, like Prime Minister of India, President of India, Chief Justice of India, Election Commissioner of India. So these people services are also not a supply. And duties performed by any person acting as a chairperson or as a member or as a director in any body established by the central government or a state government or local authority who is not deemed as an employee. Their services also will not be considered as supply. Then services of funeral, burial, crematorium, mortuary, including the transportation of deceased. When the person is alive, anyhow, government is torturing him to pay the tax on this, that, everything. From the day the baby is born, from the day you have landed on this earth till the time you die, you keep on paying the GST. Government told, at least when the person dies, let him rest in peace. We don't want to collect any GST from him. So that's why they have told services. One more important point you have to pay attention here. Only services related to funeral, burial, crematorium, mortuary, including transportation of deceased will not be supply. If you buy any goods in relation to funeral, burial, crematorium, that will be taxable. That will be supply. Whether it is exempted or not, it depends later, but that will be supply. Only services in relation to funeral, burial, crematorium, mortuary, including the transportation of deceased person, will not be treated as supply. Next one, sale of land. This point I will explain. Fifth point, sale of land. Sale of land and sale of building. Listen carefully. Sale of land. When it comes to sale of land, no confusion. When the land is getting sold, either vacant land or developed land also will get included here. So sale of land, no strings attached here. So if the land is getting sold, either developed land or vacant land, whatever it is, sale of land is outside of the GST purview. Neither supply of goods, not even supply of services. Sir, what about sale of building? What about sale of building? So when it comes to sale of building, you have to follow one system. I will tell you, this is what I usually teach it in the class. So you have to follow. In case of sale of building, whether it will qualify as supply or will not qualify as supply, that depends actually. In case if the building is sold, when I say building, even apartment, flats, all that also will come here. In case of sale of a building or flat, first you have to determine one cutoff date. One cutoff date you have to determine. Sir, what is that cutoff date? Cutoff date is earlier of date of issuance of completion certificate. Date of issuance of completion certificate by the competent authority, or date of first occupation. Date of first occupation, whichever is earlier, that date you have to determine here. I'm trying to put it as simple, in as much simple manner as I could. So in case of sale of completed sale of building or sale of flat, first you have to determine one cutoff date. Sir, what is that cutoff date? Date of issuance of completion certificate by the competent authority, or date of first occupation, whichever is earlier, that cutoff date you have to determine. Now you have to check when the consideration has been received. If entire consideration received after cutoff date, if entire consideration received after the cutoff date, that activity will not be considered as supply. It is neither supply of goods nor supply of services outside of the GST purview. Even if some consideration is also received here, even if some part of the consideration is also received before the cutoff date, then the entire value will be treated as supply of construction service. Then entire value will be treated as supply of construction service, and that value will attract the GST. Understood? That's all. This is what you have to remember. So first you determine the cutoff date, determine when the consideration is received. If entire consideration is received after the cutoff date, not at all a supply. Even if a part of the consideration, even if 1 rupee of the consideration also you have received it before the cutoff date, it will be treated as supply of construction services, and entire value will attract the GST. Okay, so this is what para number 5 of schedule 3. Now coming to the next point, actionable claims. Actionable claims are treated as neither supply of goods, not even supply of services, except specified actionable claims. That means specified actionable claims only will be treated as supply of goods. Other than specified actionable claims, if any other actionable claims are supplied, it will be neither considered as supply of goods, not even considered as supply of services. Sir, what are that specified actionable claims? Betting, casinos, gambling, horse racing, lottery, and online money gaming. Only these actionable claims will be considered as supplies. If any other actionable claim, apart from these specified actionable claims, if any other actionable claims are getting supplied, it will be neither considered as supply of goods, not even considered as supply of services. Next, we have two latest entries. One is apportionment of co-insurance premium by the lead insurer to the co-insurer. So this I will say you refer to the detailed marathon ones. In that I have given you practical example, or else let me see if I can show it to you from the marathon notes. This point I will show it to you. Very important points these are. So co-insurance premium, sharing of co-insurance premium between the co-insurer and lead insurer. Let us say, for example, there is one lead insurer here, insurance company A. There is one company which needs insurance coverage for 1000 crore rupees. They approached insurance company A. Sir, we want insurance policy for 1000 crore rupees. But insurance company don't want to take this complete risk. So they have involved insurance company B also. So now insurance company A will become lead insurer. Insurance company B will become co-insurer. Now they collectively sold the insurance policy to the company. Let us say for that they have collected 10 crore rupees of premium. On this 10 crore rupees of premium, entire 1.8 crore rupees of GST has been collected. That GST amount has been paid to the government also. Entire 10 crores worth of premium has been collected for this policy, and on that 18% GST has been paid. Actually, what will happen is this premium will be completely collected by insurance company A. Lead insurer will collect it. They will keep their share. Why? Because they are only taking a portion. Let us say they are taking 60% risk only. So in that 10 crore rupees of premium they have collected, 6 crores they will keep it. Balance 4 crores they will transfer it to the co-insurer. Balance 4 crores they will transfer it to the co-insurer. Now they said that this sharing of insurance premium by the lead insurer to the co-insurer, it will not be qualified as supply. This is not supply. On that sharing, GST will not become applicable. Why? Because this 4 crores which is getting shared with the co-insurer, this is part of the total premium 10 CR which has already been subjected to GST. So that's why on sharing of insurance premium between the lead insurer and co-insurer, there will be no GST. That is no supply at all in the first place. Then one more thing they say here in the next paragraph, they say that ceding commission. So just 1 minute. This one, services by insurer to the reinsurer for which ceding commission or reinsurance commission is deducted from reinsurance premium, that will also not attract, that will also not be a supply. Now what is this here is, let us say for example there is one company, Max Insurance Company is there. It has sold some insurance policy, 1000 crores worth of insurance policy. They have sold it. No lead insurer, no co-insurer. Initially the company sold 1000 crores related insurance policy to one company, for which they collected 10 crore rupees of premium, on which they have paid 1.8 crores of GST. That amount has been paid to the government also. So this insurance company has collected 10 crore rupees of insurance premium. Thereafter what it felt is, hey, we have taken more amount of risk. Let us do one thing. Let us get it reinsured. So this Max Insurance went to ICICI Insurance and they offered for reinsurance. Okay, this company has agreed to reinsure it, for which they are charging 5 crore rupees of premium. This reinsurance company, for doing this reinsurance, they are charging 5 crore rupees of premium. So on that reinsurance premium, will GST become applicable? Yes, absolutely, it will become applicable. So on this 5 crore rupees of reinsurance premium, 18% of GST will become applicable, and that 90 lakh rupees of GST has been paid to the government. But here the twist is, since this company has given business to the reinsurer, they will get something called ceding commission. Initially, it is their customer, no? They have given reinsurance business to ICICI reinsurer, for which they will charge some ceding commission. Let us say, for example, they are getting ceding commission. This ceding commission will be a percentage of the reinsurance premium. On this 5 crore rupees of reinsurance premium, some commission will be charged by this insurer. So let us say, for example, they are charging some commission, 80 lakh rupees of commission they are charging. And this 80 lakh rupees is part of 5 crore rupees only. Now they told that on this ceding commission, it will not be treated as supply. That ceding commission, it will not be treated as supply. Why? Because the logic is that ceding commission is part of the reinsurance premium only, which has been completely subjected to GST. So that's why that ceding commission which the insurer is charging from the reinsurer, that will not be considered as supply. On that, GST will not become applicable. Okay, so this is what I have quickly revised it, but in case if you want detailed explanation, you can go and refer the detailed marathon video. There I have elaborated these examples in a detailed manner, so you can refer to it. But I think if you have already understood the concept, if you have already prepared for the concept, all these things will sit in place. So whatever it is, this is what regarding schedule 3, those activities which will neither be considered as supply of goods, not even considered as supply of services. So schedule 3 also we have covered. Now the next concept which I want to pick here is section number 51 of the CGST Act and section number 52 of the CGST Act. Why? Because these days we are seeing a continuous question, one dedicated question they are asking from either TDS or TCS. They are asking a question, so let us try to cover it. So section number 51 talks about TDS and section number 52 talks about TCS. First we will try to understand TDS. First we will try to understand TDS concept. Sir, what is TDS concept? See here. So what is the TDS concept? There is a supplier. So let me try to explain this from the scenario. There is a supplier who is making a supply to the recipient, and for which they are required to pay the value, transaction value they are required to pay. Supplier is making a supply to the recipient where value is a 10 lakh rupees, amount of GST is 1,80,000, total 11,80,000 rupees recipient is required to pay. But section number 51 says that if the recipient falls under specified recipient, if the recipient falls under specified recipient, then this recipient is required to deduct TDS at the rate of 2%. This recipient is required to deduct TDS at the rate of 2% on the value of the supply. Okay, so not every recipient. If the recipient is a specified recipient, we will see who are the specified recipient. Under section number 51, certain recipients are specified. If the recipient falls under specified recipient, while making the payment to the supplier, he should not make the full payment. He is required to deduct TDS at the rate of 2%. That means if it is an intrastate supply, CGST at the rate of 1%, SGST at the rate of 1%. If it is an interstate supply, IGST at the rate of 2%, he is required to deduct. So let us say it is an interstate supply. So what he will do on this 10 lakh rupees, that 2% has to be calculated on the value excluding the GST. On the value excluding GST, he will calculate 2%, 20,000 he will deduct, remaining amount only he will pay. So that 9,80,000 rupees with GST, that amount only he will pay to the supplier. Now what this recipient will do with that money which he has deducted, that 20,000 rupees, that 20,000 rupees will be deposited by the recipient with the GST department against the GSTIN of the supplier. He will mention the GSTN of the supplier and he will deposit that TDS amount with the government. Now what supplier will do? Whatever amount of TDS which has been deposited against his GSTN number, that supplier can take the credit in his electronic cash ledger. But the supplier can take the credit, that supplier will take the credit in his electronic cash ledger, and once that amount gets credited to electronic cash ledger, that supplier can use it for discharging his tax liability, and even he can claim the refund also. Even he can claim refund also. This is what the TDS mechanism. Now a few things which you have to keep in mind is, sir, who are that notified recipients? You told not every recipient is required to deduct TDS, no, only notified recipients. Who are that notified recipients? They say recipients are if the recipient is a department or establishment of central government or state government, or if it is a local authority, or if it is a government authority, which a government authority or other notified persons. If the recipient falls under any of this category, if you are feeling it difficult to remember the mnemonics here, let me take you through the TDS and TCS. Just I might be showing you this. Okay, so when the TDS and TCS will get deducted, so what they say here, then the recipient should be a notified recipient. Sir, who should be that notified recipient? Let me try to explain this. Who should be notified recipient? So here we have given. So recipient should fall under any of this category. So who should be that? Either the recipient should be a central government, state government, or department or establishment of central government or state government, local authority, government agency, or other notified persons. Who are that other notified persons, sir? An authority or board which is set up by any body or which is set up by act of parliament or state legislature, which is established by any government, where 51% or more equity is by central government or state is controlled by government is there, or society which is established by central government, state government, local authority under Societies Registration Act. PSU, public sector undertaking. And one more last point here, registered person receiving the supplies of metal scrap from another registered person. These are all the notified recipients here. These are all the notified recipients. If the recipients falls under these category, then only they are required to get TDS. Who are that recipients? Central government, state government, establishment of department of central government or state government, local authority, government agency, or other notified persons. Who are that other notified person? Any body which is established by central government or act of parliament, where 51% or more of the control should be there by government, or society established by the central government, state government, or local authority. PSU. And last one, registered person receiving the supplies of metal scrap from another registered person. If the recipient falls under any of this category, then only TDS will be deducted. However, there are some exceptions. Even though recipients falls under this and one more condition here. One more condition which is required to be fulfilled for deducting TDS is value of supply under a contract should be more than 2,50,000. Two conditions for deducting TDS. Recipient should be a notified recipient. Number two, value of supply under a contract must exceed 2,50,000 rupees. Then only TDS will be deducted. So here you have to be very careful. They don't just say value of supply under a contract. When under a contract value of supply has exceeded 2,50,000 rupees, then only TDS is required to be deducted. And while calculating that value of supply, you consider only taxable supply, not exempt supply. You consider value of supply only taxable supply, not exempt supply. And while calculating that value of supply under a contract has exceeded 2,50,000 rupees or not, take the value excluding the taxes. Don't take the value excluding including the taxes. Let us say, for example, the value of supply is 2,40,000 rupees, GST is 20,000 rupees, totally 2,60,000. Is TDS required to be deducted? No. Why? Because you are required to consider only value exclusive of taxes, not inclusive of taxes. Okay, so these are the two conditions. Recipient must be a notified recipient and value of supply under a contract must be more than 2,50,000. When these two conditions are fulfilled, recipient should deduct TDS. But some exceptions are there. See, these notified recipients are there, no? If the notified recipients are there, right? If the supply is happening among the notified recipients themselves, like let us say, for example, if the department or establishment of government is making a supply to PSU, or PSU is making a supply to local authority, if the supply is happening among this, excluding the last one, so excluding this last person, registered person receiving the supplies of metal scrap from another registered person, apart from this, remaining notified persons are there? No. If the supply is happening among themselves, not between outsider, if the supply is happening among themselves, then TDS is not required to be deducted. So this is one exception. And one more point is also there where TDS will not be deducted is where location of the supplier, this point, where the location of the supplier and the place of supply is falling in same state or union territory, which is different from the location of the recipient, which is different from the state of registration of the recipient, then TDS will not be deducted. Even though the recipient is a notified person, even though value of supply under a contract has exceeded 2,50,000 rupees, but if the location of the supplier and the place of supply are falling in the same state or union territory, which is different from the state of registration of the recipient, then there is no TDS which is required to be deducted. This you have to remember it. There is a logic for that also, but it is not the time to explain you the logic, but you have to mug it up. So if the location of the supplier, place of supply, both are falling in same state or union territory, which is different from the state of registration of the recipient or union territory of registration of the recipient, TDS is not required to be deducted. Understood? So this is what here. This is regarding TDS provisions. Now we have TCS provisions. Sir, what is TCS provision? TCS provisions will become applicable whenever the supply of goods are happening through an e-commerce operator. Whenever the supply of the goods or services is happening through an e-commerce operator, that e-commerce operator is required to collect the amount of TCS. Let me explain you the logic. What exactly is this TCS? So there is a supplier. We will try to understand with the help of this example. There is a supplier who is making supply of goods through e-commerce operator to a recipient. Recipient will place the order with the e-commerce operator. That order will be forwarded to the supplier. Supplier will directly dispatch the goods to the recipient. This is what usually will happen. Today, if you are going to the Amazon and placing the order, in the backend this is happening. You are a recipient, you are placing order on Amazon. Amazon will forward that order to the supplier. Supplier will directly dispatch the goods to you. And even consideration also will be collected by the e-commerce operator. Let us say you are purchasing a mobile phone worth 50,000 rupees. This 50,000 rupees will be collected by the e-commerce operator. Now, section number 52 says that whenever this e-commerce operator is remitting that amount, whenever they are making the settlement to the supplier, they have to collect a TCS at the rate of 0.5%. How much? 0.5%. Once again, if it is interstate supply, 0.5% IGST. If it is an intrastate supply, 0.025% of SGST, 0.025% of CGST. That much they are required to do it. Okay. So 0.25%, I guess. 0.25% of CGST, 0.25% of SGST, they are required to collect it. So this is what the concept of So supply of goods or services through the e-commerce operator will be liable for TCS collection. E-commerce operator will collect the amount of TCS at the rate of 0.5%. On what? On which value he will collect it, sir? He will collect it on net value of taxable supplies. Net value of taxable supplies. So what do you mean by net value of taxable supplies? In a month, e-commerce operator will decide what is the total value of taxable supplies he has made. From that, he will reduce the returns. In a month, total supplies made by the supplier he will calculate, total outward supplies he will calculate, from that returns he will deduct, then he will arrive at the net value of the taxable supplies. On that value, the e-commerce operator will collect TCS at the rate of 0.5%. And one more important point you have to keep it here. Section number 52 will become applicable only when the e-commerce operator is collecting the amount. When the consideration is routed through the e-commerce operator, then only e-commerce operator will collect the amount of TCS. If e-commerce operator did not collect the amount of consideration, if the consideration has directly flown from recipient to the supplier, then there is no concept of TCS at all. TCS will be collected only when the consideration is flowing through the e-commerce operator. And also one more thing here, if the supplier is making the supply of services notified under 9 subsection 5 through the e-commerce operator. If the supplier is making supply of services notified under 9 subsection 5, on that services also TCS will not become applicable. On that services also TCS will not become applicable. So that's why I generally say one thing, how that TCS amount will be calculated is total value in a month, total value of supplies, whether goods or services, that will be taken. Okay. From that, they will exclude supplies notified under 9 subsection 5. Supplies, services notified under 9 subsection 5, they will be excluded. From that, returns also will be excluded. What are the returns? That also will be excluded. Balance you will get, that is the net value of taxable supplies. On that net value of taxable supplies, 0.5% will be collected. And one more point here, this 0.5% is getting collected. No, that what e-commerce operator will do with that? Can they enjoy with that money? No, they can't enjoy with that money. Then what they will do with that? That amount of TCS, whatever has been collected, that they will go and deposit with the government. Again, is a GST number of the supplier. That supplier can claim it in his electronic cash ledger. Where he can claim it? He can claim that amount in the electronic cash ledger. Clear? Able to understand? So once he claims it in the electronic cash ledger, either he can use it for discharging his tax liabilities, or even he can use it for refund also. He can claim that refund also. One more important point where examiner will test. One more last point on the e-commerce operator which examiner will test is, let us say for example, there is an e-commerce operator. There is a company Sleepwell. You might have heard about it. Sleepwell is a furniture related company. Now Sleepwell company is having their own website also. They have their app also. They have their own website also. Now they also sell their products through the website. Sleepwell company, they are selling their own products through their website or mobile application. That is also an e-commerce operator. So in this e-commerce operator, they are selling their own products or services. They are not listing others' products or services. In that case also they are required to collect TCS? No, not required. Only e-commerce operators are required to collect TCS only when they are supplying others' goods. Then only e-commerce operator will collect TCS. If the e-commerce operator, through the e-commerce operator, if you are selling your own goods, not others' goods, then there is no requirement of TCS. So that's why this today, as we could see, for many suppliers of goods or services, you are able to find their own website. They will sell their goods or services on their own website. If you take my website, I will sell my products only on my website. I am also an e-commerce operator, but I will not collect TCS because I am selling my own product. And one more point they say here, e-commerce operator other than agent. If the e-commerce operator is acting as an agent, then also he is not required to collect TCS. If the e-commerce operator is acting as an agent, then also he will not be required to collect the TCS. So these are all the special provisions, my dear students. I hope you guys are able to recollect the things. Very important, very frequently they are asking the question from here. Okay, so this also we are done. Now, next exceptional topic which I wanted to cover is section 9 subsection 5 of the CGST Act. Nothing but, see, in GST we have different kind of charges. One thing we have forward charge mechanism. Then we have something called reverse charge mechanism, right? So what is forward charge mechanism? Supplier will collect the amount of GST from the recipient and pay it to the government. What is reverse charge mechanism? Recipient only will pay the amount of GST to the government. There is one more mechanism under 9 subsection 5. So what is that 9 subsection 5 mechanism is? The government has notified that if there are suppliers who are making supply of certain specified services through e-commerce operator to the recipient. If you are a supplier of service, not all services, there are some 6 services which are notified under 9 subsection 5. How many? Previously there used to be 5. There was an amendment. One more service got added to the list. So the government has specified 6 services. If those 6 services are getting supplied by the supplier through the e-commerce operator and recipient is receiving it, neither the supplier will pay the amount of GST to the government, nor the recipient will pay the amount of GST to the government. E-commerce operator will pay the amount of GST to the government. The responsibility is on the head of the e-commerce operator to collect the amount of GST and pay it to the government. Not for all services, not for all goods. They have notified 6 services under 9 subsection 5. If that 6 notified services are getting supplied through the e-commerce operator, if those 6 services are getting supplied through the e-commerce operator, then that e-commerce operator will be liable to pay the amount of GST. Sir, what are that 6 services which are notified, sir? What are that 6 services which are notified? Let me try to explain that to you. Yeah, here we have the list. So there are 6 services which are notified under 9 subsection 5. If these services are getting supplied through the e-commerce operator, you will be liable to pay the e-commerce operator will be liable to pay the amount of GST. First one, if you see here, if the supplier could be any person, if they are providing the services of transportation of passengers by other than omnibus, if any supplier is providing the services of transportation of passengers through cab, two-wheeler, whatever it is. So if any supplier could be any person, if they are providing the services of transportation of passengers by other than omnibus through the e-commerce operator, in that case e-commerce operator only will pay the amount of GST. Anyhow, e-commerce operator will not pay it from the pocket. They will collect it from the recipient only, and they will pay and they will make the payment to the government. So whatever it is, first service notified under 9 subsection 5, any supplier providing the services of transportation of passengers by other than omnibus, e-commerce operator will pay the amount of GST. Then second one, supplier other than body corporate. Supplier other than body corporate, a supplier who should not be a body corporate, if they are providing the services of transportation of passengers by way of omnibus. Supplier other than body corporate, if they are making the supply of services of transportation of passengers by way of omnibus, and the supplier should be other than body corporate, then e-commerce operator will pay the amount of GST under 9 subsection 5. See, for normal transportation of passengers other than omnibus, supplier could be any person. But for supply of transportation of passengers by way of omnibus, supplier must be other than body corporate. Then only e-commerce operator will pay the amount of GST under 9 subsection 5. Sir, what if supplier is a body corporate? Then forward charge mechanism only. If the supplier is a body corporate, then forward charge mechanism only. That is the second one. Third service. I think my pencil has ran out of power. So just give me 1 minute. Right. If you come to the third one, in the meantime, we'll try to discuss if you come to the third service, which is notified under 9 subsection 5. Supplier who is not liable for registration under section number 22. If there is a supplier who is not liable for registration under section number 22, if they are providing the services of accommodation in places like OYO platform. OYO platform is there, right? Which is through that e-commerce operator, hotel accommodation services are getting provided. There will be a hotel owner. So that hotel owner is a supplier. That supplier is supplying the services of hotel accommodation through the e-commerce operator. And supplier is such a supplier who is not liable for registration under section number 22. Then e-commerce operator only will pay the amount of GST. Sir, what if the supplier is already liable for registration and if he is providing the accommodation services through the e-commerce operator, then who will pay GST? Then it will not get covered under 9 subsection 5. Supplier only should pay it under forward charge mechanism. So when 9 subsection 5, supplier who is not liable for registration, if they are providing accommodation services through the e-commerce operator, then the e-commerce operator will pay the amount of GST. Understood? That is the third one. Fourth one, supplier other than liable for registration under section number 22, if they are providing housekeeping services through the e-commerce operator like Urban Clap. In that cases also e-commerce operator will pay the amount of GST. Sir, what if supplier is already liable for registration? Forward charge mechanism, no 9 subsection 5. So 4 services we have covered till now. Number 1, transportation, passenger transportation services other than omnibus. Number 2, passenger transportation services by omnibus. Number 3, accommodation services. Number 4, housekeeping services. Number 5, restaurant services. So restaurant services are getting provided through e-commerce operator. They also will get covered under 9 subsection 5. But when supplier should be other than specified premises, that restaurant should not be located at specified premises. If there is a restaurant which is providing restaurant services through Swiggy or Zomato, but if that restaurant is not located at specified premises, then they will be considered. Then in that case, e-commerce operator only will pay the amount of GST. Sir, what if restaurant is a specified premise? Sir, what do you mean by specified premise? Those restaurants which are located in the 5-star hotels. Simply remember it that way. So those restaurants which are located at the 5-star hotels, they will be considered as specified premises. If those restaurants are making supply of restaurant services through the e-commerce operator, then that supplier only will pay the amount of GST. In case if the supplier is other than located at specified premises, supplier should not be, that restaurant should not be located at specified premises. If they are providing restaurant services through the e-commerce operator, then only e-commerce operator will pay the amount of GST under 9 subsection 5. One more last service here. This was a latest amendment here. Supplier who is not liable for registration under section number 22. If they are making the supply of services through, if they are making the supply of local delivery services. What services? If they are supplying local delivery services through the e-commerce operator, then also e-commerce operator only will pay the amount of GST. Basically, they are referring to that Rapido parcel services, etc. So if there is a supplier who is not liable for registration, if they are making supply of local delivery services through the e-commerce operator, then that e-commerce operator will pay the amount of GST. Sir, what if the supplier is already liable for registration? If the supplier is already liable for registration, then it will not get covered under 9 subsection 5. It will get covered under forward charge mechanism only. Understood? Right. So this is what 9 subsection 5, one such area where there is an amendment. Right. So if you come back here, so we have covered 9 subsection 5 also. Now I want to take a few sections from the registration chapter. I want to take a few sections from the registration chapter. So I know registration chapter is very huge, but in that registration chapter, there are few sections which I want to talk about it. So section number 22, 23, 24, these 3 sections I want to talk about it. Basically the person who is liable for registration and not liable for registration, that I wanted to discuss. Right. Right. So when a person will become liable for registration, first we'll see section number 22. When a person will become liable for registration is when his aggregate turnover exceeds the applicable threshold limit. When a person's aggregate turnover exceeds the applicable threshold limit, then he will become liable for registration. So first we have to understand what is the meaning of aggregate turnover. What is the meaning of aggregate turnover? We have to understand. Sir, what is the meaning of aggregate turnover? That is very important. Various places you are going to come across this aggregate turnover. So what will get included in the aggregate turnover? All taxable supplies, exempt supplies, export of goods or services or both, interstate supplies of the persons between having same PAN. That also will get covered. Everything will get covered here. So what and all will be included in the aggregate turnover? It includes taxable supplies. It includes exempt supplies. When I say exempt supplies includes 3 things. It could be wholly exempted supply. It could be non-taxable supply. It even could be a nil rated supply. All these 3 put together, we call it as exempt supply. So tell me, what is exempt supply? It includes wholly exempted supply, non-taxable supply, nil rated supply. All these 3 put together, we call it as exempt supply. Everything you have to include it in the aggregate turnover. So all taxable supplies, exempt supplies, export of goods or services, even exports also should be included, and interstate supplies of the persons having same PAN, nothing but distinct person related supplies also should be included in the aggregate turnover. Sir, what should be excluded from the aggregate turnover, sir? That figure of turnover, whatever you are taking, that should be exclusive of taxes. Don't include CGST, SGST, UTGST, IGST or cess. Taxes should not be included. It should be excluded. And if you are a recipient who are receiving the services and who are receiving services, if you are a recipient receiving the services on which you are liable to pay GST under reverse charge mechanism, that also will not form part of your turnover. That will form part of the supplier's turnover. If you are a recipient who is receiving the services on which you are liable to pay the GST under reverse charge mechanism, will that inward supply be included in your aggregate turnover? No, it will not get included in your turnover. It will always get included in the supplier's turnover only. So value of inward supplies on which tax is payable under reverse charge mechanism, that will not get included in your turnover. That will get included in your supplier's turnover. So you have to be very careful about this definition of aggregate turnover. And few more points here. It shall be computed on all India basis. We are required to calculate the turnover on all India basis. So take state-wise turnover, total it up, then you will get the aggregate turnover. And it includes all supplies made by the taxable person, whether on his own account or on behalf of his principals. Either you are making the supply on whether you are making the supply on your own account or on behalf of the principal, then you will be liable to, then that also will be included in your aggregate turnover. So this is what the meaning of aggregate turnover. It should be computed on all India basis. It includes supply made by taxable person either on his own account or on behalf of all the principals. Right. Next one. Coming to the next point. So someone is asking a question, sir, in the case of a discount which is as per pre-agreement but not recorded in the invoice, will it be able to deduct such a discount? Yes, we have already covered it as a part of this video only. We have covered it. Once the live gets over, you can go back and revisit it. Regarding this, I have already clarified in this video itself. I have clarified it, so you can go back and refer. So we have understood what is an aggregate turnover. Now we have to check the applicable threshold limit. Very important. Sir, what will be the applicable threshold limit? So what is the limit applicable? This also I will try to explain it with the help of one thing I have here. Where is it? Yes. Sir, what is the applicable threshold limit for registration? I will tell you in a simple way. Let us try to understand it. So in case you have calculated aggregate turnover, now you have to determine whether he is liable for registration or not. You have to compare that with the applicable threshold limit. Sir, which applicable threshold limit will be applicable for a client? For a registered person, for a business person, what is the applicable threshold limit? First, you should check whether is he making any taxable supply from MMNT. Whether the person is making taxable supply from MMNT. Sir, what is MMNT? Manipur, Mizoram, Nagaland, Tripura. If the person is making a taxable supply from MMNT, not exempt here. If he is making a taxable supply from MMNT, then the applicable threshold limit will be 10 lakh rupees. Whether he is engaged in supply of goods, supply of services, or supply of both. If you are making a taxable supply from these 4 special category states, whether you are engaged in supply of goods, whether you are engaged in supply of services, or you are engaged in supply of both, applicable threshold limit will be 10 lakh rupees. That's all. Next. No, sir, I am a person. I am not making a taxable supply from MMNT. Then come to the second point. In case if you are not making taxable supply from MMNT, you need to check whether you are making a taxable supply from UP MATs. Whether you are making a taxable supply from UP MATs. Sir, what is UP MATs? So, Uttarakhand, Puducherry, Meghalaya, Arunachal Pradesh, Telangana, Sikkim. So you need to check whether you are making any taxable supply from this UP MATs. In case if you are making a taxable supply from UP MATs, whether you are engaged in supply of goods or you are engaged in supply of services or you are engaged in supply of both, applicable threshold limit will be 20 only. Applicable threshold limit will be 20. Next, no sir, I am not making a taxable supply from MMNT also. I am not making a taxable supply from UP MATs also. Then what will happen? In all other cases, if you are a person who is exclusively engaged in supply of goods, applicable threshold limit will be 40. But however, some exceptions are there. So what do you mean by exceptions? Even though if you are exclusively engaged in supply of goods, still you can't enjoy the enhanced threshold limit of 40. You will enjoy the threshold limit of 20 only. What are that exceptions? We'll come back to that later. But in case if you are not making taxable supply from MMNT, you are also not making taxable supply from UP MATs. In that case, you have to check whether you are exclusively engaged in supply of goods. If yes, usually 40 lakh rupees. In case if you are engaged in supply of services or supply of both, then the applicable threshold limit will be 20. Okay, so that means if you are not making taxable supply from MMNT, if you are not making taxable supply from UP MATs, if you are a person who is exclusively engaged in supply of goods, you can enjoy the enhanced threshold limit of 40. You can enjoy increased threshold limit of 40. But however, in some cases, this enhanced threshold limit of 40 will not become applicable. That means in some cases, even though you are not making taxable supply from MMNT, even though you are not making taxable supply from UP MATs, even though you are exclusively engaged in supply of goods, still you can't enjoy that 40 lakh rupees of limit. You will still be eligible for 20 lakh rupees of limit only. Sir, what are that exceptions? What are that exceptions? Where even though I am exclusively engaged in supply of goods, still I can't enjoy that 40 lakh rupees of threshold limit. When you are required to take compulsory registration. If you are a person falling under section number 24 who is liable to take compulsory registration, then no limit will become applicable for you. You are liable for compulsory registration. And if you are a person engaged in making supplies, they are saying, when they say making supply, either you are manufacturing or you are trading. Whether you are engaged in manufacturing or trading of any of these 7 products, then you will be not eligible for enhanced threshold limit. So what are the supplies which I should not get engaged into? Ice cream and other edible ice, whether or not containing cocoa, pan masala, all goods of chapter 4, that is tobacco and manufactured tobacco substitutes, fly ash bricks, fly ash aggregate, fly ash blocks, bricks of fossil mills or similar siliceous earth, building bricks, earthen or roofing tiles. So if you are engaged in making supplies of any of these 7 products, then you can't enjoy the threshold limit of 40 lakh rupees. Then if you are a person making intra-state supplies in the states of UP MATs or MMNT, this anyhow I have covered. If you are making taxable supply from MMNT, if you are making taxable supply from UP MATs, then anyhow you can't enjoy the enhanced threshold limit of 40. And if you are making interstate supply, this point doesn't require any mention. Why? Because if you are making interstate supply, anyhow you will get covered under compulsory registration. No need to check the threshold limit. You will become liable for compulsory registration. And if you are such a person who has opted for voluntary registration, then also there is no purpose of checking the limits and all, because you have opted for voluntary registration. Anyhow you will become liable. Anyhow you are already registered. Clear? So these are the exceptions where a person can't enjoy the enhanced threshold limit of 40. So this is one point which I wanted to say it here. Okay, now I am proceeding further. So if you are a person liable for compulsory, when a person will become liable for registration under section number 22 subsection 1, whatever I have told you now, that is 22 subsection 1. So what is the applicable threshold limit? Determination of applicable threshold limit is very important. For this you can refer to that chart. There are few more cases also where a person will become liable for registration under 22. We have 22 subsection 2, which says that if you are already registered person, if you are, before this GST Act came into picture, if you are already registered under existing tax laws, you become liable for compulsory registration under new act. So that is one thing, 22 subsection 2. If you are already registered under earlier laws, now you become liable for compulsory registration with effect from the effective date. Next, in case if the business is getting transferred, if there is a registered person, if that person is transferring his business either because of succession, ownership change or death of a sole proprietor, then whoever is a transferee, they are required to get compulsorily registered. For this transferee, once again threshold limit and all will not be checked. If the registered person is transferring the business to a transferee, that transferee should become liable for registration under section number 22 subsection 3. Similarly, if there is any amalgamation or demerger on the order of court or tribunal, so if there is an amalgamation happening or if there is a demerger happening, because of that new entities will get created. If it is an amalgamation, amalgamated entity will be there. If it is a demerger, resulting entities will be there. So that resulting entities or amalgamated entities, they will also become liable for registration in case of amalgamation. Next, so this is what regarding section number 22. Now I will talk about section number 24, where a person will not become liable for registration. Where a person will not become liable for registration. Where a person will become liable for compulsory registration. Section number 24 will try to cover. So when a person will become liable for compulsory registration, let us have a quick look at it. Quickly, I will go through it. Number one, if you are a person making any interstate taxable supply. If you are making interstate taxable supply, then you become liable for compulsory registration. However, they have given some relaxations. 2 relaxations they have given here. So what is the relaxation? Number one is, if you are a person making interstate taxable supply of services, you are making interstate supply but not goods. But if you are making interstate supply of services, you are not liable for compulsory registration. You can enjoy the enhanced threshold limit of 10 or 20, whatever is applicable. One more relaxation they have given. If you are a person making interstate supply of goods, but the goods which you are making an interstate supply are notified handmade goods or notified handicraft products, then also you are not liable to take compulsory registration. Services, no restriction. Without any restriction, any service you can make interstate supply, you can enjoy the threshold limit. But in case if you are making interstate supply of the goods, those goods must be notified handicraft goods or notified handmade goods, then you can enjoy that a threshold limit of 10 or 20. However, in case if you are making interstate taxable supply of notified handicraft goods or products and you are enjoying that exemption from registration, and every moment you have to send the e-way bill. You must have a PAN and you must generate the e-way bill. This you remember it. MCQ is important. So if you are making interstate supply and you are enjoying the exemption because you are making interstate supply of notified handicraft products or notified handmade goods, you must possess a PAN and you must generate an e-way bill. Okay. So this is the first case along with related exceptions. Number 2, CTP. Even CTPs are also liable for compulsory registration. But for one CTP, they have given exemption. What is that exemption? You know, if you are a CTP making an interstate taxable supply of notified handicraft products or notified handmade goods, then you are not liable for registration up to a threshold limit of 10 or 20. But there also you must possess a PAN and you must generate an e-way bill for causing the movement. So even for CTPs also, we have compulsory registration. One exception is that if you are a CTP making an interstate supply of notified handicraft goods or notified handmade goods. Then persons who are required to pay tax under reverse charge mechanism on their inward supplies. Let us say, for example, there is a supplier. He is making a supply to a recipient. If this recipient is required to pay the GST under RCM, if this is getting covered under RCM, since you are a recipient liable to pay the GST under reverse charge mechanism, you are liable for compulsory registration. No turnover, nothing will be checked for you. You will be liable for compulsory registration. Now here they have given one related exemption from supplier. If you are such a supplier, if all your outward supplies are getting covered under RCM, you are making different outward supplies. If all your outward supplies are getting covered under RCM, you are not making a single supply which is getting covered under FCM on which you are liable to pay the amount of GST under forward charge mechanism. If all your outward supplies are getting covered under reverse charge mechanism, then for this supplier there is an exemption. This supplier is not liable to get registered because he is making all the supplies under forward charge, under reverse charge mechanism only, where all the liability will get discharged by the recipient. He will not have any payment obligation. That's why department told, dear supplier, we will give you exemption from registration irrespective of your turnover. NRTP, even for NRTPs also they are liable for compulsory registration. E-commerce operators are also required to undergo compulsory registration. Every e-commerce operator who is required to collect TCS under section number 52, just in the previous session I have told who are that e-commerce operator who are required to collect TCS under section number 52. So every e-commerce operator who is required to collect TCS under section number 52 liable for compulsory registration. Similarly, every e-commerce operator who is required to pay the tax under 9 subsection 5. Just now I told which are the e-commerce operator who are liable to pay the tax under 9 subsection 5. So if you are an e-commerce operator required to collect TCS under section number 52, if you are an e-commerce operator who is required to pay the tax under 9 subsection 5, you will be liable for taking compulsory registration. Not just that, even they told one more thing, not just e-commerce operator. If you are a person making supply of goods or services through the e-commerce operator who is required to collect TCS under section number 52, even that supplier of the goods or services are also liable for registration. Initially, they told e-commerce operator. Now they are telling not just e-commerce operator. If you are a supplier making supply of the goods or services through such e-commerce operator who is required to collect TCS under section number 52, you will also be liable for compulsory registration. But later they have given exemptions. So whatever exemptions they have given for a normal person, the same exemption they have given even for those suppliers also. Which means if you are a person making supply of services through the e-commerce operator, you can enjoy the threshold limit of 10 or 20, whether you are making interstate supply or intrastate supply. If you are making supply of goods through the e-commerce operator, then also you can enjoy threshold limit of 10, 20 or 40, whatever it is. So initially they told even the persons who supply goods or services through e-commerce operator other than notified under 9 subsection 5 who are required to collect TCS, even that suppliers are also required to take registration, but later they gave relaxation. Nothing but whatever relaxation they have given for normal person, even that person is making supply of goods or services through e-commerce operator, he will become eligible for exemption. That the threshold limit he can enjoy. Next, few more categories of the persons who are liable for compulsory registration. A person who is required to deduct TDS under section number 51. TDS deductor, just in the previous session I have told, which people are required to deduct TDS under section number 51. They are liable to undergo compulsory registration. Next, persons who make taxable supplies of goods or services on behalf of other taxable person. That means if you are an agent, if you are making a taxable supply on behalf of a principal who is a taxable person, then you will be liable for compulsory registration. One point you have to keep in mind here, which agents are liable for compulsory registration? They must be making taxable supply on behalf of a principal who is a taxable person. So when mandatory registration will come into picture here, if you are such an agent who is making a taxable supply on behalf of another taxable person, then only compulsory registration. If you are an agent, if you are making an exempt supply on behalf of taxable principal, will you be liable for compulsory registration? No. Let us say you are an agent. Let me put it this way. You are an agent. You are making a taxable supply on behalf of a principal. Principal is not a taxable person. Will you be liable for compulsory registration? No. Two conditions must be fulfilled. You are an agent making a taxable supply on behalf of your taxable principal. Then only compulsory registration. Thereafter, every person who is supplying OIDR services from a place outside of India to a person in India, liable for compulsory registration. Input service distributor, liable for compulsory registration. Person supplying online money gaming services from a place outside of India, liable for compulsory registration. Any other person as may be notified by the government on the recommendations of the council. Clear? So this is what regarding section number 22. Now we have section number 24, sorry. Now we have section number 23, which is talking about persons who are not liable for registration. Simply, I will try to wind it up here. Only two things we have to discuss. If you are a person who is exclusively engaged in making supply of goods which are not liable to tax or which are wholly exempt from tax. Let us say, for example, I am a person who is selling the 5 petroleum products. So that 5 petroleum products which are not at all subjected to GST. If I am running a petrol pump where I am selling only that 5 petroleum products, my turnover is 100 crore rupees. Am I liable to be registered? No. Why? Because you are a person exclusively engaged in making supply of wholly exempted supplies or non-taxable supplies or nil rated supplies. No need to take GST. Next, if you are an agriculturist, to the extent of supply of produce out of cultivation of land. If you are an agriculturist, if you are making supply only out of cultivation of land, no matter how much turnover you are doing, you are not liable for registration. But here you have to be very clear who is agriculturist. So agricultural status can be enjoyed only by individual or HUF. So individual or HUF who take up the cultivation of land either by own labor, by labor of family, or by servants under their supervision. Servants or labor under their supervision, they only can enjoy the agriculturist status. And one more point you have to remember: if you are an agriculturist, in addition to selling produce out of cultivation out of land, if you are making any other supply, then you will be liable to GST if your aggregate turnover has exceeded. If you are only making supply out of cultivation of land, then only you are exempted from registration. In addition to making supply out of cultivation of land, if you are making any other taxable supply and if your aggregate turnover has exceeded the applicable threshold limit, then you will become liable for registration. Understood? So this is what I thought of covering 3 sections 22, 23, 24 that we are done. Coming to the next part, effective date of registration. Sir, what will be the effective date of registration? This is also one such area which is very important, which will have connection with so many places. If you are a person liable for registration, I will write it here itself. If you became liable for registration on one day, let us say for example, you became liable for registration on 15th of March. If you are submitting the application within 30 days, let us say you are submitting the application on 20th of March only. Within 30 days you have submitted the application? Yes. Thereafter, registration certificate will be granted. Let us say for example, registration certificate has been granted on 15th of April. Even though you get the registration certificate here, your registration will be effective retrospectively from the date you become liable for registration. Even though you got the registration certificate later, but your registration will be effective retrospectively from the date you become liable for registration. From that point of time, your registration will come into force. So the point which I want to conclude here is, if you become liable for registration within 30 days, if you have submitted the application for registration, thereafter you have been granted the registration certificate, even though you are getting your GST and later, your registration will be effective retrospectively from the date when you become liable for registration. So from this date itself, your registration will be effective. Sir, what if I submitted an application for registration after 30 days, sir? I become liable for registration after 30 days. If I am submitting an application for registration, then what will happen? Then my registration certificate will be granted. No, from that date itself, my registration will be effective. There will be no retrospective effectiveness. So if I want to enjoy retrospective effectiveness of my registration, I have to submit an application within 30 days from the date I become liable for registration. If I am submitting an application for registration after 30 days of becoming liable for registration, in that case, I can't enjoy the effective date from retrospectively from the date of grant of registration certificate. My registration will be effective. Now, what is the purpose here is, if your registration has become effective retrospectively from the date you become liable for registration till the time you got the registration certificate, you can give the revised tax invoices. Within 30 days, within 1 month from the date of registration, you can issue the revised tax invoices. That is one connecting provision here. So this is what regarding effective date of registration, which I wanted to bring it before you. Now I wanted to talk about two exemptions mainly. One is goods transportation services related exemption and passenger transportation services related exemption. These two things I want to cover. Thereafter, I will wind up my discussion. So two things I wanted to talk about it: goods transportation services and passenger transportation services. These two areas I will cover from the chart. I have chart where what will be the exemptions relating to goods transportation services and what will be the exemptions related to passenger transportation services. I have chart. These charts are all available. These charts are all available on the website. So in the description of this video, you will be able to find the website. Just visit the website, go to the free resources section. In the free resources section, you will be able to find out the exemption related charts. This chart will be available to you. You can download it and you can use it for your purposes. So coming to passenger transportation services, what are the exemptions associated with passenger transportation services? Let us see. So passenger transportation services can happen by way of air. It can happen by railways. It can also happen by water. It can also happen by road. Passenger transportation services can happen in different manner. So now when exempted, when not exempted, we'll try to have a look at it. In case passenger transportation services are happening by way of air, passenger transportation services are getting provided by air. Then exemption will be available in one case. What is that? If a passenger is embarking or terminating, either you are boarding or you are dropping. So embarking or terminating from any of these states: Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura and Bagdodra of West Bengal. Not entire West Bengal, a place called Bagdodra in West Bengal. If you are either embarking or terminating your journey, either you are boarding or you are getting down. So either you are embarking or terminating from any of these places: Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura and Bagdodra from West Bengal. And if that travel is happening in an economy class, then it will be exempted. Then you can enjoy exemption. Than that, GST will not become applicable. And one more exception is available in case of passenger transportation services by way of air. If that passenger transportation services are provided to central government for passengers who are either embarking or terminating at regional connectivity scheme, at a airport connected by regional connectivity scheme, where they are getting the consideration in the form of viability gap funding, that is also exempted. So we have one scheme where let us say, for example, Indigo Airlines is there. They are running flight services for one of the airport which is covered under RCS scheme, regional connectivity scheme. So if you are running the transportation services at RCS, this Indigo Airlines will generally have to charge low amount of consideration. Let us say, for example, this is some place located, some tier 2 city is there. There one airport is there. So if you have to board the flight from there, they will charge only 2,000 from the passenger. But central government will give them some concession in the form of viability gap funding. Like that, they will try to compensate this airline company because they are running their airlines in the airport connected by regional connectivity scheme. Now they are telling this viability gap funding, the services provided by this airline company to the central government in the form of viability gap funding consideration, that is also exempted. However, it will be valid. This exemption will be available only up to 3 years from the commencement of operations at a RCS airport. Up to 3 years from the commencement of operations at the RCS airport only, they can enjoy the exemption. Okay. Next, in case if the passenger transportation service is happening by railways, if the passenger transportation service is happening, when exempted. If the passenger transportation service is happening in metro, monorail and tramway, exempt. Railways, normal railways, not metro, monorail, tramway, normal Indian railways, if you are availing the transportation services, if you are traveling in a first class or air conditioned coach, then it will be taxable. Others, other than first class or air conditioned coach, if you are traveling, then it will be exempted. No need to pay GST on it. In case if you are transporting, in case if you are availing passenger transportation services by way of water, you are availing the passenger transportation services. If that is the case, if the transportation is happening through inland waterways, whatever may be the purpose, it could be for tourism purpose, other than tourism purposes, doesn't matter. If the passenger transportation services is happening through inland waterways, exempt, no GST. Whatever could be the purpose, it could be tourism purpose, not for tourism purpose, doesn't matter. Transportation, passenger transportation services through inland waterways, always exempt. Others means what? Through vessel, not inland waterways, through vessel. Then you need to check, is it because of public transport? It is predominantly not for tourism purposes. You are traveling in a vessel from one place to another place, not through inland waterways, and that is not for tourism purposes, that is for public transport, then it will be exempted. However, it is for tourism, tour purposes, etc., then it will become taxable. Okay, next comes transportation of passengers by road. So here is where they ask many kind of questions here. So in case of transportation of passengers by road, if the transportation of passengers is happening by way of contract carriage, that too non-air conditioned contract carriage, and it should not be for conducted tour, it should not be conducted for tourism purposes, it should not be for hire or charter. So transportation of passengers by road by way of contract carriage, non-air conditioned contract carriage, it should not be for tourism purposes, it should not be a conducted tour, it should not be a hire, it should not be a charter. Similarly, transportation of passengers by road by way of stage carrier, that too it should be non-air conditioned, or by way of metered cabs, or including auto rickshaw, including e-rickshaw. So if the transportation of passengers is happening through these modes, through a contract carriage, non-air conditioned, stage carrier, non-air conditioned, metered cabs or auto rickshaws, then you have to check, are you enjoying this passenger transportation services through e-commerce operator? If it is through e-commerce operator, it will already be covered under 9 subsection 5. E-commerce operator anyhow will collect the GST. No exemption will be there. It will get covered and it will be taxable. And anyhow it will get covered under 9 subsection 5. E-commerce operator only will collect the amount of GST here. That's why no exemption. In case if it is not getting provided through e-commerce operator, then it will be exempt. Clear? Next. On the other hand, if the transportation of passengers is happening by way of radio taxi, whether through e-commerce operator, non-e-commerce operator, air condition, non-air condition, doesn't matter. It is happening by way of radio taxi, always and always taxable. Others, apart from that, that means others, if any other mode of transportation is happening by road, then it will be taxable. Only this you have to remember. This is the main thing which you have to remember. Radio taxi anyhow you will remember. This is the only part you have to remember. If they ask you passenger transportation services, first you have to recollect this list. Contract carriage, not air conditioned. Stage carrier, non-air conditioned. Metered cabs and auto rickshaws. So metered cabs and auto rickshaw anyhow will not be air conditioned, that you anyhow know it. So you have to check. You have to just remember this list. Then you check whether these services are getting provided through e-commerce operator or other than e-commerce operator. If it is through e-commerce operator, taxable. If it is through other than e-commerce operator, exempted. This is the only list you have to remember. Apart from this, any other is there, that will be always taxable. Understood? Next. Then we have goods transportation services which are exempted. Even for services relating to goods transportation also we have exemption. Let us try to understand what are that goods transportation related services which are exempted. So here also goods transportation can happen in different modes. Either it can happen by air, by water, by rail or by road. Road is an important part. This is where questions are going to come from, but quickly we will try to cover the other modes also. If the goods are transported by air, if the goods are getting transported by air, there will be no exemption. It will always be taxable. No exemption, nothing. By air, if you are transporting the goods, you will always be liable to pay the amount of GST. If the goods are getting transported by water, through water if you are transporting the goods. If it is through inland waterways, exempt. No matter what goods you are transporting, if you are transporting the goods by way of water through inland waterways, it is exempt. If you pay close attention, passenger transportation services through inland waterways is also exempt. Goods transportation services through inland waterways is also exempt. No matter what goods you are transporting. Others, you are causing the transportation of goods through water, but not through inland waterways. Through ocean if you are transporting the goods. In that case, you should check what are the goods which are getting transported. If the goods are falling under random category. Sir, what is random, sir? I have given it here. Randoms R stands for relief material for victims or calamities or man-made disasters or accidents. A stands for agricultural produce. N for newspapers, magazines, registered newspapers and magazines. D for defense military equipment. O for organic manure. M for milk, salts, food grains. So in case if it is falling under random category, the goods are getting transported through ocean, but the goods are falling under random category. What are random category are? R for relief material, A for agricultural produce, N for newspapers or magazines, D for defense military equipment, O for organic manure, M for milk, salt, food grains. You have to remember this list. So goods are getting transported through ocean, not through inland waterways, but if they are falling under random category, exempt. If any other goods are getting transported through ocean, then it will be taxable. Okay, next. Goods are getting transported by rail. Goods are getting transported by rail. Here also, first you have to check what are the goods falling under. If the goods are falling under random category, once again random, just now we have seen the list. If the goods are falling under random category, it will be exempt. If any other goods are there, not random, if some other goods are getting transported through rail, then it will be taxable. Okay, next comes road. If the goods are getting transported by way of road, this is where the questions are going to come from. Listen carefully now. The goods are getting transported by road. If it is through goods transport agency, or if the transportation is done by courier agency, then it will be taxable. Others will be exempt. I have kept star mark at different places. I will come back to that later. Listen carefully. In case of transportation of goods through road, if that goods transportation services are provided through goods transport agency, then taxability will come. If that transportation of goods are getting provided through courier agency, then also taxability will come. If anybody else is providing the transportation of goods by road, then it will be generally exempted. Like for example, individual truck driver, individual tempo driver, which is not a GTA. What is GTA? The person who is engaged in transportation of goods and who issue a consignment note. That people we call them as GTA. Let us say there is an individual truck operator, individual tempo operator. He is providing the services of transportation of goods. That person is fall under others category. He is not a GTA, he is not a courier agency, he will fall under other category. Their services are exempted. Taxability will come into picture only when the goods are supplied, when the transportation of goods is happening by GTA or courier agency. So when it comes to courier agency, no special things, nothing. Goods transported by courier agency will always be taxable here. Door to door delivery, whatever you call it, courier agency, if they are transporting the goods, it will always be taxable. Now coming to the GTA part. So when you come to the GTA part, you have to check. Through the goods transport agency, you are causing the transportation of goods, but if they are falling under random category, that list will remain common. So random is common. That list is going to be uniform. So if you are transporting the goods through GTA, but if the goods are falling under random category, then exempt. No one will be liable to pay the amount of GST. But if you are causing the transportation of goods, they are not falling under random category, then only you come to the next points. If the goods are falling under the random category, here itself it will end. The discussion ended. Exempt. Goods are getting transported through GTA, and if the goods are falling under random category, exempt. That's all. No need to go to the next point. But in case if the goods are not falling under random category, then you come to the next point. Check who is the recipient. Goods are getting transported through GTA, but the goods are not falling under random category. Then you check who is the recipient. If the recipient is falling under specified recipient. Sir, who is specified recipient? A factory registered under Factories Act, a society registered under Cooperative Societies Act or Society Registration Act, or a cooperative society, body corporate, partnership firm, including LLP, whether registered or unregistered, doesn't matter, including association of persons, or already a registered person, including registered CTP. If the recipient falls under any of this specified recipients category. Who are that specified recipients? Factory registered under Factories Act, society registered under Society Registration Act, cooperative society registered under Cooperative Societies Act, body corporate registered under any law, partnership firm, whether or not registered or unregistered. For partnership firm, whether it could be registered or unregistered, doesn't matter, including LLP and association of persons. And finally, registered person. If you are a registered person under GST, including a registered CTP, the recipient falls under this specified recipient, then RCM will become applicable. Those services will be taxable. Recipient will be liable to pay the GST under reverse charge mechanism. Recipient will be liable to pay GST under reverse charge mechanism. But here there is one option. If the supplier who is a GTA service provider, if he has taken registration and if he has opted to pay the GST under forward charge mechanism and he will issue the invoice, in that case, if the option has been exercised by the supplier GTA service provider, then forward charge mechanism will become applicable. Okay, so generally if the recipient falls under specified recipients, RCM. But there also one option they have given. If the supplier of the GTA service provider, if he comes forward, if he takes a registration and he exercises the option that I will only pay the GST under forward charge mechanism, I will issue the invoice. If he comes forward and exercises the option, then forward charge mechanism will become applicable. That GTA service provider only will pay the amount of GST. If he is not exercising the option, then reverse charge mechanism. If you are paying the GST under reverse charge mechanism, applicable rate of GST is 5%. If the GTA service provider has opted to pay the GST under forward charge mechanism, then in that case, what will be the rate of GST? We have two rates. One is 18% with full ITC and other one is 5% with restricted ITC. This is where amendment has come. Previously, the rate used to be 12%. Now the rate has become 18%. Okay, see everything I am connecting here. So if you are a GTA service provider, if you have opted to pay the GST under forward charge mechanism, two rates will become applicable for you. Either pay 18% and take full ITC, or pay take restricted ITC and pay only 5%. Any option you can exercise it. Okay, so that is the next point. If the recipient is falling under specified recipient, then they can pay the GST under reverse charge mechanism, provided supplier has not exercised the option. But however, one special point is there. If your recipient is a specified recipient, let us say if your recipient is a registered person, but if that recipient is a department or establishment of central government or state government or local authority or government agency who has taken registration only for deducting TDS but not for making any taxable supply, exempt, no TDS, no RCM, no FCM. Sir, recipient is registered. Generally, if the recipient is registered, he will go to the specified recipient. RCM should become applicable, but they have given one exemption. What exemption they have given? If the recipient is a registered person, but what kind of registered person? If it's a department or establishment of central government or state government, if they are a local authority or government agency who have taken registration only for deducting TDS under section number 51, but not for making any taxable supply, even though they are falling under specified recipients category here, but still they are not liable to pay any GST under RCM, no FCM also, the government has given exemption. Take enjoy exemption, you enjoy. Okay, next one more case here, sir. Others, sir. If the recipient is other recipient, sir, he is not falling under specified recipient. If the recipient is any other recipient, sir, then it will be exempt. Then it will be exempt. I have covered many things here. RCM I have covered, exemptions I have covered, multiple things I have covered it into one single chart here. Okay, clear? So once again, if you look at the overall structure, goods transportation services by way of road through goods transport agency, taxable, subject to exemptions. Courier agency, always taxable. Others, exempted. But at various places, I have kept one star mark. If you are able to see, I have kept one star mark here. At various places, I have kept one star mark. Where and all you are able to find the star mark? You are able to find the star mark at inland waterways. You are able to find the star mark at others here. You are able to find the star mark at GTA. For all this 3 star mark, I have given one comment. What is that comment? Exemption will not be available for local delivery services when provided through e-commerce operator or by e-commerce operator. If the goods transportation services are provided through inland waterways, but those are local delivery services either provided by e-commerce operator or through e-commerce operator, then exemption will not become applicable. Those services will become taxable. Similarly, if the GTA is providing the services, GTA will not include the local delivery platform. In the GTA definition itself, we are not bringing the local delivery platform. And similarly, others, I told that transportation of goods by road to others will be exempted. But when I say others here, this exemption will not become applicable for local delivery services. Today we are getting local delivery services, no, Rapido, Parcel, Zepto, these local delivery services, we are getting it, right? Those are taxable. They don't want to bring it under exemption here. That one simple point you have to remember. If local delivery services are happening like through Rapido, Parcel, Zepto, or this Blinkit, through that we are getting local delivery services, no, for which we are paying them, no, government doesn't want to exempt it. So that's why they told exemption will not be available for local delivery services, whether when provided through e-commerce operator or when provided by e-commerce operator. Then the government doesn't want to give any exemption. They want to bring them under taxation purview. Clear? So these are the goods and transportation services. So this is what the exceptional topics which I have identified and I thought which will be helping you out in your quick revision. Hope you guys have enjoyed this video and hope you guys have recollected many provisions and you guys have been participative. So I could see a good number of people viewing this thing. So even after this live stream gets end, still this video will be available on YouTube. If you want to come back and re-refer any of these points, you can come and re-refer. And one more thing I want to add it here. Yesterday itself I have uploaded one video where I have covered RCM services, all services covered under RCM. All services covered under RCM, all RCM services. I have done 1 hour of video. If you are getting stuck, in case if you are unable to remember the RCM services, if you want one quick reference, if you are already comfortable with RCM services, no need to refer to that. In case if you are still getting stuck with RCM services, I have uploaded one quick revision video for all RCM services. Kindly go and refer to it. If you are already comfortable, don't refer to it. If you are not comfortable, go and refer to it. Why? Because even from RCM services also compulsorily somewhere around some 4 to 6 marks will be tested. So that's why I have uploaded that video well in advance. You kindly go and refer to that. That will be helpful for you. So once again, all the very best, my dear students. Take care. See you and do very good in your exams. Whatever balance time that is left out, please do utilize it properly. Don't waste it. And all the very best. Take care. Trust in your efforts. Everything good will happen. You will successfully complete your exams. Have the trust in yourself.